them up. And when it comes to transaction revenue, which makes up 96% of net revenue for Coinbase, retail represents over $1 billion, 1.04. Institutional represents 56 million. So the breakdown is actually 95% of transaction revenue is from retail investors, whereas the remaining 5% comes from institutions. So that is an area that this company hopes to grow over time.
Yeah, for certain. All right, Leslie, let's take a quick break. I know you'll stay put just in case. We'll be back right after this along with final trades.
All right, thank you guys. Welcome to the stream. I started up a little bit early. It seemed like they were gonna they're gonna IPO, but it was just an announcement. Nothing really going on right now, so I'm gonna start streaming. We're gonna go over some charts. Let's go see what's going on with coin. Right now it's somewhere around 350 plus. I'm gonna tweet this. Just give me a second, guys, here. All right, just putting it out there. Let's go bullish on this one, baby. Let's go. All right. So if you guys have any, what's up, Justin? What's up? What's up? You get 12 up in here. So if you guys want me to check out any ticker symbols, let me know. Currently, right now, I have CCIV up here. CCIV holding the 2170 spot here and pulling back, looking a little sluggish right now. And what's up, Tom? CCIV to the moon. Right on, Tom UK. What up? And yeah, CCIV just lingering right now. Not much going on for the past few days. Holding strong above $20. This is a very good sign for support. It's holding strong, so we're going to see this go up possibly after some consolidation. This could take a few weeks, months. After some consolidation, we can see this get a nice bullish rally. I want to see CCIV above 30 here, and keep it going. I think we're gonna have a strong year. They're gonna start selling vehicles this year, and I think we're gonna see some nice action CCIV this year. I mean, I'm still in it. I'm still holding a few thousand shares, and yeah, this is a time to be patient and get fat and eat as much as you can. Try to buy as many shares as you can. And just wait for the ride to come along. So we're here moments away, waiting for the Coinbase IPO. Just full disclosure, I'm not buying any. That thing's way overvalued. I mean, I see the value, and I see what Coinbase is doing. It's just like the little guys, retail. We don't have a chance. I'm not gonna buy it at these levels when institutions bought in, months ago. And oh, here we go. They got the best price.
Friedman, by the way, waiting on that first trade too, as we are rising in the indicative price, 378 approaching 379. We're back right after this.
It seems like we're just moments away. They keep on showing Coinbase. They might be IPOing very soon. So yeah, institutions get at a very good valuation at the best price, and us retail, we're buying at the top. They could literally dump the shares on us. I'm not cool with that, but I'm here to see the fireworks. I like Coinbase. I like what they do. I just, I don't think it's a time to go all in heavy on it, unless you have like a 10, 20-year outlook and you have that kind of capital. I mean, personally, I'm not going to tie my capital right now at the moment. Yeah, market is inflated right now. 379 going for that sympathy buy. Kareem, be careful with sympathy buy. Yeah. So also we have Nas here, the rapper. He could net about $100 million with Coinbase listing. So this is what I'm talking about. The big money gets the first dibs. He probably bought in months ago, if not years ago. So I'm not saying anything on Nas in particular, like he jumping like last minute. Who knows when he bought in? But it's a deal here for this guy. He's gonna be going straight to the bank. At this point, he'll probably hold. If I was him, I would just hold. I'm sure he got a good price. There's no need to dump it. I mean, if you got a good price, it's a hold. And let's see here. I'm trying to get the feed going. I don't know why it's not refreshing. Let's go to, oh, here we go. Real time. Let's go. All right. All right. Here. Let's search for coin here. I want to get the feed in the background. There we go. I want to see what people are saying live. Here we go. After the Coinbase listing, we're going to be going humble OTC stock. It's a FinTwit stock. We're going to be going over with burner market trading, and we're going to have a day full of IPOs and some nice over-the-counter stocks, penny stocks. So we have a lot going on today. Make sure you guys stick around after Coinbase. Humble will be CEO will also be talking here live. So we have a lot going on today. Here we go. We got the feed going now here. Let's see what's going on.
All right, guys, let's do final trades as we still await Coinbase. Jenny, what do you have for us?
SL Green. We've seen in the last couple of weeks that companies like JP Morgan, JP Morgan and Google want to return their workers to the office. 5.1% dividend yield. I think as people return, we'll see renewed value in those assets.
Okay, Doc, you were saying what's up?
Sorry about that, Scott. You cut out partway through, so I didn't hear the voice. PLBY. They're doing NFTs with the Winklevi and their nifty gateway. I think that's enough to drive this one higher. I bought calls.
Joe, quick.
Marriott, I expect it to take out 160 in the near term.
Michael?
Jenny says be particular and safe. I like Pepsi before the earnings here. Market multiple growing and a great dividend, almost 3%.
Jenny, we are waiting Coinbase, and Joe said he'd buy it today, albeit at a little bit of a lower price. Now it's 380, which is the indicated price. You're going to get about $100 billion valuation for this company. Jenny, what's your view on Coinbase? Would you buy it?
No way. I'm in the John Najarian camp, but it's a great story. But I don't buy stories. I buy numbers. And the numbers here are illogical. They're saying their total addressable market is 3.5 billion people, everyone who uses a cell phone. That's ridiculous. They're charging their individual users a 1.4% transaction fee. That's 95%. But they say they want to grow their institutions that pay 10 basis.
$250. You are looking at a valuation about $100 billion. It is a historic moment for cryptocurrency, no matter how you slice it. That does it for us. The exchange is next.
Thank you very much, Scott. I am Dominic Chu here today. Here's what's ahead. A shiny new coin. We are awaiting, of course, Coinbase's first trade with the indication of more than $200 above its reference price at this point. We've got your opening trade and analysis coming up. Plus, with stocks at all-time highs, we've got names that Wall Street thinks are still good values in everything from energy to healthcare to solar. And why the SEC could be headed in a crypto-friendly direction. But first, let's get a check on the markets right now because we are at record highs yet again. So if you take a look at the overall picture right now, green on the screen very much so for the Dow Industrials, up about 200 points, 0.5% gains there. The S&P 500, 41.46 the last trade there, up about 0.1%. These both get those gold stars because they both hit record highs in trading today. The Nasdaq Composite lagging here just about 0.2% to the downside. Of course, we're watching what's happening with the cryptocurrency markets because of the Coinbase IPO. Bitcoin prices hit a record high today. We're not far from that level right now, 63,485 the last trade there, according to Coin Metrics over the last year. Yes, that 800% gain, a lot of that's driving some of the sensitivity around those prices that Bitcoin could be trading at, and of course what that leads to with Coinbase's valuation. And if you recall, some viewers who have been with us since the early morning hours in Squawk Box, we showed these stocks earlier in the pre-market trade: Tesla, MicroStrategy, Square, and Riot Blockchain. We showed them because they were all positive. Some traders attributing that to this proxy effect. These companies all own blockchain, or rather Bitcoin, on their balance sheets. At one point, they were proxies. You could take a view on Bitcoin by owning some of these companies. Well, now these stocks are all lower on the day. You can see here, especially Riot Blockchain and MicroStrategy. Why? Because there's an effect that some traders are noting. Now you can actually see a more direct derivative way to play Bitcoin prices rather than these companies, because you can just do it through Coinbase. So perhaps some of the money coming out of these stocks moving in to a Coinbase type situation. We'll continue to watch and see if that trade plays out as well. Well, let's get straight to the big story of the day. Coinbase, of course, set to make its debut on the NASDAQ. The company will become the first major crypto business to go public in America. The opening trade could happen at any moment at this point here. Leslie Pickard joins me now with the latest there. Leslie, we've watched that indication price creep higher and higher and higher. Now we're at $380 or thereabouts, which means close to a $100 billion valuation with certain assumptions in place. Take us through the play-by-play so far and what you're seeing.
It means it's close to a $100 billion valuation. It also means it surpassed the highest trade that this company had during the first quarter of the year, where it reached about $375 per share. So remarkable for a few reasons. Number one, everyone is kind of seeing this as a watershed moment for the crypto industry. Of course, a $100 billion company debuting on the NASDAQ today, allowing basically anyone who wants to can invest in this company now and get indirect exposure to crypto. Of course, Coinbase is a company. They serve as an exchange. They allow people to buy and sell and store crypto. So you can kind of compare it to almost like a New York Stock Exchange or a NASDAQ with the type of business model they have. Now, with regard to transaction fees, that's how they make 96% of their revenue. It's actually more lucrative than what you see with some of those more traditional exchanges, which is why some people are giving this company more of a premium on a multiple basis. That said, Dom, at a $100 billion valuation, when you take the market caps of ICE, which is the parent company of NYSE, and combine it with the NASDAQ, you don't get $100 billion. So clearly there is a lot of excitement around this company and what it does operating in the crypto space. Now, on the flip side, it is expected to be inextricably linked to cryptocurrency, particularly Bitcoin. So the number one risk factor in their prospectus is you can expect some significant volatility with this company when it's off to the races. We will be chatting about this even more next hour. We'll be interviewing Nelson Griggs, who is the president of the NASDAQ, where Coinbase is listed, Dom.
Leslie, it's interesting that you bring up some of the comparisons with regard to this type of company, which is obviously a very pioneering type one, I guess, right? The first public crypto exchange here in America. Carl Quintanilla tweeted out earlier this past hour that Goldman Sachs itself has a valuation, a market value right now of $117 billion. So you're talking about a company that's been around since 2012, that works in cryptocurrency, that's now going to rival one of the most venerable investment banks in world history at this point. Is there any way that investors may be looking at this saying it's indicative of more bubble-ish type behavior? You cover SPACs, you cover private equity deals. What's your sense there?
Yeah, so I've been talking with investors just to get a sense of where their head is with this thing. It was a direct listing. So unlike a traditional IPO process, there was no marketing of the shares to institutional investors. There was no allocation to institutional investors. There was no price range by which to sell shares and then an IPO price at that range. So the normal kind of fundamental analysis that goes on with a traditional IPO wasn't taking place on a roadshow per se. That said, trying to get a sense from institutional investors how they see this stock now once it begins trading. A lot of them were a bit more comfortable at lower levels. That said, there is significant interest. The challenge, I think, for institutional investors, at least at this point in time, is this idea of being able to really model this company, do some fundamental analysis, project future cash flows for a company that's revenue is so tied to what's going on in the crypto market and the volatility therein. It's just really, really difficult to be able to do that. For example, one of the analysts at MoffettNathanson had a research report where they were projecting, tripling of revenue this year, and then next year revenue going down 37%. So it really depends on your time horizon here. It really depends on where you foresee the cryptocurrency, the underlying asset going in the future.
All right, I tweeted out earlier, Leslie, fundamental analysis meets HODL, HODL meets fundamental analysis. You can kind of figure it out from there. Leslie, I know that you'll be with us all hour, so stick around, please, tracking all of that Coinbase trading. Now, this direct listing is a watershed moment, as Leslie pointed out, for cryptocurrency. Coinbase is nearly at that $100 billion valuation mark, more than triple that of the NASDAQ itself. For more now, let's bring in Bobby Cho, partner at CMS Holdings, also Emily Parker, the co-host of First Mover on CoinDesk TV. Bobby, Emily, thank you both for joining us here. I mean, Emily, let's talk a little bit about the macro environment that we're in right now. How did we get to a point where we are seeing $64,000 per token for Bitcoin And then how is that translating into the investor enthusiasm for an offering like Coinbase?
Thanks so much for having me. Yes, they're definitely directly related. There are a lot of factors driving up the price of Bitcoin, but I think one of the main ones is institutional investment and institutional involvement. And ironically, even though Bitcoin started out as this rebellious currency that was supposed to be divorced from banks and governments and big institutions, a lot of what's driving Bitcoin up are these brand names. For example, PayPal letting people buy Bitcoin, or Tesla allowing people to pay with Bitcoin. And then you have a lot of these other big brand names getting into the act, like Morgan Stanley, Goldman Sachs, BNY Mellon. So I think that's a really big part of the story, that people are starting to see crypto as a more mainstream investment that is backed by big institutions.
All right, so Bobby, it was hard enough for anybody out there, even crypto experts we speak to tell us exactly how they can model out a value or a fundamental fair value for Bitcoin prices. If you take a look at the price action that we're seeing right now in Coinbase, indicated at the open with a nearly $100 billion valuation, would you be a buyer even at those levels?
I'm a buyer. Thanks for having me. I think for us at CMS, we look at it as a growth story. Obviously, Coinbase has been around since 2012. They've been growing thoroughly through that. And even into the progression of going into the public markets, I mean, there is a core growth story that is tied to Coinbase. Part of that is sort of a thematic theme that we sort of play off at CMS, which is basically that there was a big idea that traditional firms were going to come in and disrupt the crypto markets. But now firms like Coinbase, which are paving the way for other firms, are now looking for ways to disrupt traditional markets and traditional banking. And I think a core piece of that is Coinbase's customer base of 56 million people. I mean, that's more than some banks out there, and certainly more than some apps as well.
So Bobby, if I could follow up there, earlier today, I remember, because it was in our 5 a.m. hour during Worldwide Exchange, we had interviewed Santosh Rao, who's at Manhattan Venture Partners. They are an early investor at the venture stage for Coinbase. We asked him what he thought the fair market value of Coinbase should be. And as an investor in the company, he told us this morning he thought $98 billion. That was the value he saw there. Why should you pay more than that if the investors who are already there are saying that it's worth about $100 billion at this point?
I think it really depends on your time horizon when you apply some of these investments. I mean, the way that I sort of look at it is simply put in terms of comps and different aspects of that. And one of those could be a company like PayPal, which is arguably 3.5 times bigger than Coinbase right now. I mean, it's not a question of why PayPal started to integrate more crypto products into their user base and product base, mainly because I think they see this idea that Coinbase could grow even bigger and start to eat into, if they haven't already, eaten into sort of their products and the revenues.
Emily, you brought up the idea of this anti-institutional effect that was a driver behind much of the interest before. It was maybe a number of years back when we used to mention Bitcoin in the same sentence or phrase as arms dealers or drug dealers. I mean, television shows were writing into their scripts at that point about people taking it as payment for illicit goods and services. We've come a long way. This is now the institutionalization of the crypto world. What exactly does that mean then for the future trajectory of cryptocurrency and perhaps Coinbase in general?
Well, it depends on who you ask. I mean, I think most people right now in the crypto industry are pretty excited about this because crypto, as you said, has been kind of an underdog for a long time. And we've all had to explain to our families that, we're not in the money laundering business and that this is a legit thing. So now you have the SEC basically giving Coinbase the green light to list on NASDAQ. This is a huge deal. But at the same time, there are also crypto purists who I think, may resist this idea of crypto becoming more institutionalized, and you will likely see more adoption of more decentralized finance, DeFi, decentralized exchanges that some would argue hold on more to the original ethos of crypto, which is, to get rid of the middleman and to do transactions more directly on a blockchain.
It's funny, Emily, that the conversation used to be that Bitcoin was the underdog. I mean, Dogecoin is probably the underdog these days, and Bitcoin is probably the 800-pound gorilla. Bobby, I'll turn to you here. We've talked so much about this idea that Bitcoin is the driver behind a lot of this enthusiasm right now. Is there room for other cryptocurrencies like Ethereum, Ether, like Litecoin, like Ripple, perhaps in some worlds, like all these other altcoins that are out there? Is there a way that all of that ecosystem really feeds into the broader success story, possibly for a company like Coinbase?
Yeah, I think if you look at it more as like an asset class versus some individualized token out there. Look, Bitcoin was the first, and it generated a number of ideas out there, like Ethereum, like some of these other tokens out there. Look, a lot of these tokens at this point are looking for a home in terms of a use case, much like some of the startups that are in the space. I mean, Coinbase went through the same sort of discovery process when they launched in 2012. They were looking for product market fit, and obviously they achieved that. So I think there definitely is room. Obviously, I still think we're scratching the surface in terms of sort of where crypto goes from here. I think you are seeing a number of tokens that are trying to tackle certain use cases in real estate and other types of products like that. And it's TBD to see kind of where that goes.
You know, Emily, in a former life, you were part of the institution itself. You worked at the State Department for the U.S. government a while back, and now you're kind of like you're very much neck deep in this crypto market here. How big of a threat is the institutionalization in terms of the overall government side of things, the regulatory aspect, the crackdown that some governments have already made or may make in the future with regard to some of these types of products? With Coinbase itself, one of the big theses about this is that they are legitimizing it. They're asking for identification. They're issuing 1099 forms for your IRS tax returns. How big of a deal will government regulation be down the line?
Government regulation will absolutely be a big deal. And I think even amidst all the bullishness, that is probably the biggest thing to watch out for, how governments all over the world will handle the rise of crypto. And I'm not that worried about the United States. I think the countries to look at are, for example, India, which has definitely hinted at banning crypto in the past. You know, China has definitely cracked down on crypto, although people are still trading crypto there. So, you know, no country can crack down on crypto entirely. It's pretty impossible to shut it down. That's kind of the magic of Bitcoin, is that it's decentralized and immune to total government control. However, governments can make it much more difficult for the average person to access the crypto market. So I think that's really one of the main things to watch out for in the next months.
All right, so Bobby, as you look at Coinbase, this could be just the beginning. This is the first major crypto-related public offering in America. What do you see as the next iteration, or what's going to come next in terms of the company that goes public in this particular arena? Is it something with regard to digital wallets? Is it something with regard to other exchanges? What do you think is the next step here?
Yeah, that's a good point, Dom. And you know, I'll reference back to I guess a few nights ago on Shepard Smith's show. Kathy Wood was on there from ARK Invest, and I've known Kathy since the beginning of sort of her foray into sort of the Bitcoin markets and getting into it. And digital wallets is something that she brought on that is going to be a big theme. And if you look at a company like Coinbase, I mean, they would be the native home to start this digital wallet movement. I mean, they already have it with crypto, but when you start thinking and talking about some of the newer products that are out there, which you know, what you guys talk about almost daily now, such as NFTs or other types of digital forms of just products out there. I mean, Coinbase would be the natural place where that would start, in my opinion, mainly because they own the full stack of trading, exchanging, custody, clearing, and all of those types of services. And so I think kind of next in line, much like what Coinbase did, was pave the way for a lot of crypto companies on how they should be operating the space. So I think it'll be really fun to watch.
I mean, this is just the scratch the surface part of the conversation, you two. Thank you guys very much for being here. Bobby Cho, also Emily, we'll see you later on when those shares start trading again. Please stick around. Coming up on the show, with stocks at all-time highs, are there still cheap names out there that investors can buy? Wall Street analysts say yes. We've got those names, a few of them coming up next. Plus, why we could be on the verge of a more crypto-friendly Washington, D.C. We touched that conversation just this last hour. And we're still waiting for Coinbase's first trade. The indication right now, just for your information, is $381.56 on the NASDAQ. We are back on the exchange after this.
This is The Exchange on CNBC.
You know that.
Employee, you can now get Eargo at no cost to you. Act now.
quickly, not just in the U.S., but actually even in places like Europe. So you're seeing a lot of price pressure due to supply constraints, and now you're going to see, also a substantial rebound in the economic growth picture, particularly in the U.S., where we have a very easy monetary policy, and we have massive increase in money supply last year, and then we also have a extremely expansive fiscal policy that could become more expansive.
You know, we have seen the M2 chart that John Authors used in his column was just mind-boggling. The money supply jumping to not only a record, but doing an Al Gore style, hockey stick. And I wonder if that's a real concern, or can the economy grow enough as we reopen to keep up with that?
So in 2009 to say 2019, the Fed failed to see inflation rise above their target, which is why the Fed has decided, while they're proactive in cutting rates, they've decided to be reactive in raising rates. Okay, and they're also feeling like they can somehow control the level of unemployment by doing that. So we're sort of repeating the experience of the 1960s, except in the 1960s, to be fair to the Fed back then, they didn't know the Phillips curve didn't offer a permanent trade-off between inflation and unemployment. And we should probably know better. So I think that at this point, I think that the Fed is, there's a lot of stimulus in the system. We're looking at a presentation recently by a guy at the Harvard Business School who does something called price stats. I think his name is Alberto Cavallo, and he's showing like high frequency inflation prices going up everywhere, for example. So I think there's a lot of reason to believe that the economy is going to overheat here, and we're going to get a lot more inflation than the Fed thinks. And the difference this time is that we're spending all this money on fiscal policy, like kind of World War II type spending almost.
Well, only $5 trillion so far from the federal government, maybe $12 trillion from the Fed in emergency moves since the beginning of the pandemic. In the meantime, the BCOM, Bloomberg Commodities Index, has shot up. We see jumps in everything from aluminum to gasoline, food prices we've already talked about. Nonetheless, Powell says that's transitory, and he just told David Rubenstein unemployment can go low without triggering inflation. Is that really the key here? You mentioned the Phillips curve, and it's been problematic for a number of Fed governors already. Can we really get unemployment down with this commodity jump without triggering really sustained inflation?
Well, even if unemployment doesn't drop dramatically, let's say unemployment gets to, headline unemployment gets to 4 something, but meantime, there's still labor force participation that's dropped, right? That doesn't mean you can't get inflation. I mean, we've had inflation in the 1970s where we had double-digit, sum of inflation plus unemployment. So it's possible to have high unemployment and inflation at the same time. In this case, we've got the economy supercharged, right? We're trying to grow it faster than potential, basically. And we're, in order to push unemployment down.
Okay, I'm unmuted here for a moment. Chris, I just pulled up the article. PaySafe getting a little bit of love here. So this was released on April 11th. PaySafe issues Coinbase new Visa debit card, enabling easier cryptocurrency spending. London, UK, global payments provider PaySafe Group today announces its role in the launch of the Coinbase card, the cryptocurrency exchange's new Visa debit card, which is issued by PaySafe, is now available across the UK and soon to be rolled out across Europe. Very good catalyst there. PaySafe getting some Coinbase love here, some crypto love. We see it's moving, make a nice little move here, pre-IPO, and it's trading at some pretty nice lows here at the $13 resistance mark. So PaySafe looking really good right now. Further in the article, it says the new Coinbase card makes cryptocurrencies within a Coinbase account as easy to spend as traditional money by instantly exchanging the cryptocurrency for British pound or other fiat currencies that can be accessed through the card. Customers can use their card to make contactless payments, chip and PIN transactions, or withdraw cash for their Coinbase digital currency wallets at an ATM. Globally, Coinbase stewards more than 30 million accounts and more than 220 billion in assets have been traded on Coinbase. Big news here, Coinbase, this was released 3 days ago. PaySafe, in collaboration with Coinbase, now in circulation in the UK. Really nice catalyst here. So a ticker symbol to be watching out here, pre-IPO, PaySafe. PaySafe making a move here. I feel a little motivated here. I feel like doing some put credit spreads here. I might take a stab here for a few days out, get some May contracts. Very nice. This guy was kind of boring. Let's see here. Let's see. It's CNBC. Let's see what they're talking about over there.
How big of a deal is the other part of the crypto atmosphere right now?
So the key part is that they talk about it. So Bitcoin and Ethereum really are the only game in town for Coinbase and the other exchanges. The talk of decentralized finance and what could be things like stocks being tokenized and the whole economy essentially moving to blockchain, that is the ideal scenario for these guys. So there's so much excitement around what could be. A lot of these things are very early stage, but another interesting point, we're going to see a lot of new Bitcoin millionaires, potentially billionaires today. They'll probably take some of that money and some of that windfall invested into earlier stage companies. Where do you think they're going? Crypto companies, blockchain companies. So that is seen as a big boost for this early stage economy. And we might see the results of that, 3-4 years down the road.
Kate, we know that the market valuation of this particular...
Just to go back on this PaySafe article that was released on April 11th, I got a little too excited here, guys. Regardless, they are working with Coinbase, but this article was from 2019. I totally missed the date. I just pulled it up, and this article came out when I did a little Google search. So this is an extremely old article, but now that PaySafe is trading the stock market, and now that Coinbase is going to IPO, I mean, this article is very relevant. So this is an old article, and that's been going on. So good news overall, but yeah, it was a little dated, but still relevant.
Investors, they're excited about Coinbase, they're excited about names like Robinhood, and even sort of the Cathie Wood stocks. They're betting big on payments and sort of the next phase of the economy, and they're taking big bets. And if they, like we mentioned, they'll have to believe that this crypto economy is going somewhere. There are a lot of people that are taking very bullish long-term stances. So in that sense, you could sort of group these companies together, and Robinhood likely will see some of the same enthusiasm.
All right. Kate Rooney, stick with us because we got a lot more to talk about here. Let's bring back in Bobby Cho, partner at CMS Holdings, also Emily Parker, co-host of First Mover on CoinDesk TV. Bobby, we bring up a lot of those points that we spoke about earlier. Kate's talking a little bit more about the investor excitement around these names. Is there a point at which you, as an investor in a company like this, would say, you know what, I've made a good amount of money. Now's the time for me to maybe pair some of those bets out there. I know that it's too early to talk about that now for people who aren't in it yet. But for those early stage people who've been there, like Kate said, for years now at this point, this is a lot of money that's been made on paper right now, and they can realize it with a big liquidity event.
Yeah, for sure. I mean, look, it's a ton of money that's being created, a ton of wealth that's being created. But look, if you believed in the vision of what Coinbase set forth, what Brian and Fred had done in 2012, if you were believers back then, you're more of a believer today. So, you may see investors take some money off the table, which is completely responsible. But at the same point, I don't even think that they've reached the point at which
Bobby, let me just stop you right there. It has just opened up for trading. The opening print, $381, that figure, that's up roughly 50-some%. It's currently, you can see on our screens right now, trading at just about 386 and change at this point here. So let's just ballpark it because the numbers are huge. It's roughly 55% upside right now from the reference price of $250 per share, and it's now hit $390 per share. That's up $56 from that trade there. So remember, $385 or thereabouts was the general estimate, back of the envelope, if you will, for a $100 billion valuation for this on a fully diluted basis. It just means counting all the shares that could be out there issued for everything else. Let's bring in our own Leslie Picker right now, who's watched that opening trade happen. I'm seeing 394 figure right now. Leslie, this is just going higher and higher.
Yeah, Dom, at 381, it's 99.553 on a fully diluted basis for market cap. So you're right. The market really does like that nice round even $100 billion valuation for this company. Important to note, that reference price that we're looking at, up 57% from there, no money was really exchanged at that reference price as you would see in an IPO. So the number we want to track today is 381 and what the upside is from there. So we're looking at upwards of $15 a share based on the current trading. That's what we will monitor until close today, is how it has changed from that opening level, because this is a direct listing versus a traditional IPO. Now, it's also worth noting where 381 is relative to where the stock was trading in the secondary market. So here in the S1, during the first quarter, the highest these shares traded in the private markets was 375.01. So significant upside from the private markets, significant upside so far from where this stock opened, and it continues to climb, at least in these first few minutes of trading, Dom. It's honestly a remarkable sight to see. Largest direct listing ever, largest company that is exposed to the crypto space to go public, and a remarkable first day of trading for Coinbase here.
All right, Leslie, I'm going to stop you right there, because those people who are watching it on our screens right now just saw it hit $400, that big figure in terms of per share. For listeners out there, again, we're showing the intraday chart, and you can kind of expect to see what we're seeing right now. It's basically a very volatile trade, but it's holding right up around $399 to $400 per share right now, again, against that reference price of $250 a share that was put out there last night. Let's now bring in Bob Pisani, who's been tracking this action as well. Bob, maybe no surprise that this was going to be a hot issue to begin with, but were there any kind of real expectations among the traders that you speak with on a normal basis about just how high Coinbase could go?
I think what's amazing is trying to figure out the valuation. Even a week before, I was seeing estimates of a $50 billion valuation, $100 billion. I saw $150 billion valuations. When you're dealing with magnitudes of order off on the estimates, you have traders really unsure of what's going on. This is a new technology. It is essentially an exchange. I was around when the NASDAQ went public in 2000. I covered that. And I remember the feeling that, oh, here is a company that's been around for a while, since 1971. But the NASDAQ represented a really new way of trading, a public exchange that was out there. And it was kind of revolutionary at the time. This is the same way for Coinbase. At $100 billion, I think people ought to realize where we're at here. There's only about 84, 85 companies with $100 billion valuation. Target's $100 billion valuation, for example. Micron's $100 billion. Goldman Sachs is $113 billion. General Electric is $118 billion. So essentially, we're dealing with a very, very rarefied atmosphere here. BlackRock, hugely the biggest financial services company in the world, is $120 billion. And Dom, can I just point out, Gary Gensler was just appointed the head of the SEC 1 hour ago, and there's the crypto enthusiasts are very excited about Gensler. He has taught blockchain at MIT. He is aware of the issues. People think more awareness is a good thing. And, of course, he's going to be the guy who's going to be ruling on a Bitcoin ETF down the road. He's going to be in charge of new regulations for Bitcoin securities. Remember, Bitcoin's a commodity. It's controlled by the CFTC. It's regulated by them. But Bitcoin securities, like a Bitcoin ETF or ICOs, coins, they're regulated by the SEC. And Gensler's going to spend a lot of time trying to figure out a new regulatory scheme for these crypto assets.
Emily, let's turn to you here, because we had kind of broached the topic of the regulatory environment. Bob Pisani just brought up the alphabet soup that's going to be interested in what happens with cryptocurrency trading, whether it be in kind of securitized or institutional format. How important is it for a company like Coinbase, perhaps, but in general, the entire industry, that there is a more, I guess, easy way, if you will, for many investors to get in on this, which could include things like exchange-traded funds or 40 Act investment-type companies that buy these on behalf of mutually held clients?
It's hugely important for the crypto industry, and that's why this listing is so important, because Coinbase in many ways is seen as a gateway to the mainstream world. Coinbase is relatively easy to use, it's trusted, so it's for new investors who want to get into the crypto market. But by that same token, so to speak, that could actually be a risk to Coinbase over the long term, because Coinbase is going to start seeing more competition from banks. You know, if there is an ETF, will that pose a risk to Coinbase? Or, you know, if a bank allows you to start buying crypto out of your checking account, will people still use Coinbase? So interestingly, as crypto gets more and more mainstream, Coinbase will have to maintain that first mover advantage.
But Bobby, I mean, spread compression is inevitable, because when you put profits out there for the taking, competitors will eventually eke their way into eat part of your pie, right? I mean, that's the whole way that it goes. We know that if, you know, the institutionalization of cryptocurrency adds legitimacy to this market, spreads will compress, because institutional players will offer their ETFs to give mainstream investors access to this. They will pay, by the way, those lower fees that Coinbase and other exchanges operate with, rather than the big, hefty ones that are perhaps even 10 times the size of the institutional spreads that investors pay. Is that in any way kind of a discouraging factor for investing in a company like Coinbase right now, knowing that it only gets worse from a margin perspective from here on out?
I think a few of those viewpoints are just a little short-sighted, in my opinion. I think they're missing the much bigger picture here. There's 56 million customers on Coinbase and growing. This is not a story, in my opinion, about where crypto takes Coinbase or where Coinbase takes crypto. This is the idea of how Coinbase is going to be able to start to cross-sell different products that you may have gotten from other financial services companies, which obviously have had a monster quarter this past year, or this past quarter, I'm sorry. And so there's this opportunity for Coinbase to access all different types of traditional products. Look, 2 years ago, I believe they bought Keystone broker-dealer, so that's in the works. And there are other ways that they haven't even tapped into in terms of monetizing how current exchanges, as you had mentioned, NYSE, NASDAQ, those types of players are currently making money, such as market data. At this point, market data is free, but at some point, they're going to start to latch onto some of those revenue streams. And I just look at all of that as a growth opportunity here of just within the crypto space. But again, the bigger picture for me is this overall ecosystem that they're trying to build with this, what I consider probably their best asset, which is their customer base.
So Kate Rooney, if you look at that customer base right now, this is a situation where, yes, they are growing it, but at some point here, they are going to face that competition. How exactly then does that competitive landscape start to evolve, at least in, say, the next 6 to 12 months? Does this give at least some kind of a push for some of the companies out there to expand their marketing efforts, their client acquisition efforts, because they've seen what Coinbase can do and has done now that it's a publicly traded company?
We have seen this slowly play out after people saw what happened with Coinbase in the first quarter. A lot of companies, I think, probably realize that is an extremely profitable business. We also got some numbers from Robinhood. They now have about 9.5 million people trading crypto. They're adding about 3 million people per month, which is huge compared to what they were seeing last year. There are people kind of quietly nipping at the heels of Coinbase. The backers of Coinbase, any Bitcoin bull would tell you they've got a first mover advantage. They have things like security that people go to that company for those reasons, and that there are startups that are trying to do the same thing. They might not be able to. The first thing is people are doing this through partnerships. So they're not building what Coinbase has built from scratch. So there's that. You have people like Robinhood or PayPal partnering with Paxos. But the big risk here, like you mentioned, fee compression. The idea that somebody could come in, potentially subsidize this, offer trading for free, and get more customers, kind of eat into Coinbase's margins. We might see the same thing play out that we saw with the brokerage firms a couple of years ago. That's a huge risk, especially when Coinbase is making more than 90% of its revenue on trading fees alone. But I think the onus is on them to diversify, move into more institutional trading, and play up some of those other sides of the business.
It's a new frontier for sure. We want to thank, first of all, our panel here. Bobby Cho, Emily Parker, our own Leslie Picker, our own Kate Rooney, our own Bob Bassani will be talking with you, I'm sure, for the rest of the afternoon, the rest of the day here and beyond on this big moment here for the crypto world. Thank you very much, guys. Well, coming up on the show, as the markets hit all-time highs, we'll look at some of the names that Wall Street still thinks are undervalued. And, of course, we'll keep an eye on Coinbase for you as the stock soars in its debut. You can see right there that spike higher, roughly 64% higher today, $409 per share, the last trade there. The exchange will be right back.
It's a 13-hour.
Okay, so now we see Coinbase hit about 430 here, 429.54, massive sell-off coming out here. You can see here on the order book level 2, we see support here in the 390s. It's going to be interesting. We see heavy sell side here on the right side. We see some big numbers here on the tape, and we see some support on the left side here on the buy side. So it's going to be interesting to see where we go from here. You know, Coinbase hit 429.54, is trying to hold the 400 level. It's going to be interesting to see if we hold the 400 level. This is a 5-minute candles here. We have about, you know, a few more hours before the close. We have about 2 more hours before the close. And we're trying to see where this Coinbase stabilizes. You know, it opened at 380.99, you know, massive run up, looking very strong, very solid, and it ran out of gas here at 429.54. Now we have a big wick here. It looks like it wants to hold the $400 level, and we see here in the order book, we see a lot of buy side, but we see also on this side on the tape, we see, you know, around the 398 level, we see some sell side. So we're gonna see here the time and sells. We're seeing a lot of green here with some sporadic red. So a lot of action going on right now with Coinbase. Be careful out there, guys, playing it. We see here on the twits, on the twits, we see a lot of activity going on, and yeah, this is the one to watch. I'm bullish overall on crypto. I just think right now everything's a little bit heated, and I think we're gonna see a pullback overall in the crypto markets and in Coinbase. I think there's a lot of hype. And I think overall long term, it's obviously going to do very well. It's just right on the volatility, it can get a little dangerous. So just be careful out there, guys. You know, we don't know where this is going to stabilize. You know, this valuation for this company doubled basically in a few months. And yeah, I believe when they started talking about this IPO, they were talking about it being, I think it was valued, and it was like they're projecting a number of like $100, $150 per share. I believe it was more like $150 per share. And now, you know, a few months later, we're here at 430. So markets are crazy right now. It's very interesting to see them release Coinbase right now in the middle of this, you know, market, you know, conditions.
Did you know that Geico's whole 50...
Let's see how some of the mining stocks are doing right now. Now that it IPO, let's take a look at Riot. They were actually down. Riot and Mara, let's see. Riot is currently trading. It's huge sell-off here on Riot on the 5-minute chart. Let's look at the daily just to see a bigger picture here. Yes, huge sell-off here. So it's going to be interesting to see what we get here. Maybe we get a shake-off and we get a sell-off here across cryptos and miners. Let's take a look at Mara just to shake some people off with a little head shake, because a lot of people are buying at these levels. So here we go. This is a daily on Mara. Huge sell-off once again. So we got a huge anticipation run-up before the IPO. And then as soon as the IPO happened, we're getting a sell-off here. So I don't know if these crypto miners are an indicator of what Coinbase might be doing in the next few days, but we're seeing the miners going down. So let's take a look at Bitcoin itself. Let's see how it's reacting. So this is Bitcoin dailies. We're seeing similar action here. We're seeing a sell-off. This could be a shake-off. It could be a bear trap. So we're going to see how Coinbase holds here, and we're going to see what the cryptos do in the next few minutes, hours. Let's go back to Coin. Coin here, selling off. Now it's at 395. It's still holding. It wants to stay above 400, and it's getting stuck here at 395. So be careful if you're buying at these levels. I certainly wouldn't be buying at these levels. I would wait a few days for price to stabilize And also, you know, at these levels, it's pretty expensive. It's pretty expensive. Who knows if it goes to 500 in a week, 600? You know, who's to say? But I think right now markets are a little crazy. You see SPACs selling off, and then you see the overall major market, you know, going higher. And it's only a few key ticker symbols that are really carrying the overall market as a whole. So very weird times at this moment. So now we're seeing here Coinbase at 398. So it's staying above 390. It's looking like it's stabilizing here above 390.
For the buck. Bernie Madoff, His Life and Crimes. Premieres tonight, 8 Eastern, CNBC.
Welcome back to The Exchange. We have a quick news alert here for you on Walmart. The company is announcing a plan to move more of its part-time associates to full-time with the goal of having 2/3 of its associates.
Yeah, Gabriel, yeah, it's expensive at these levels, but, you know, things are irrational. And right now, we might see, since it's the hottest IPO, we could see a flood of people coming in here, some big institutions, some big money, just to pump up, just to squeeze some few dollars and just dump it. I mean, it's a wild game right now. It's very, very weird, different times. We have, you know, indices at all-time highs. We have some of the SPACs and lower cap stocks eating a big one. We see the VIX, you know, cooling off, but some of the major indices, some of the major talks, some of the major stocks are not really rallying. It's only a handful of FANG stocks that are carrying the whole market, which is completely weird. Like, good luck hedging right now with VIX or doing anything specific. This is right now, in my opinion, an option seller's market. I started selling put credit spreads. I haven't done any iron condors, but definitely it's a season to sell some options and just suck the premium out of everything. So we're seeing here the tape. We're getting a little bit of blood here on the tape. We're getting a lot of red with some sporadic green now. So now it's turning. Before we're getting a lot of green with some sporadic red. Now we're getting a lot of red with some sporadic green. So we'll see if it holds above 390 here.
Finally, a move that the employees have been asking for a while, and the company actually has 80% of its workforce full-time that work in the distribution centers, in the fulfillment centers. So they sort of do have a model for this, and they're moving more that way for the store employees, which has been a request for some time.
All right, more on the employment picture in America. Courtney Reagan, thank you very much for the update on the Walmart there. Well, it's been a stellar year so far for the markets overall, with the S&P and Dow at record highs. And after a rough few weeks, the NASDAQ just is 1% away from its own record. So if you're looking to put money to work and there are any values left out there with much of the market at record highs, can you actually find them? Well, based on Wall Street estimates, the answer could be yes. So here's a group of stocks that are currently trading about 20% or more below their average analyst target.
So I came back here to Riot down 11%. So big sell-off here. People got caught here with the bull squeeze, you know, anticipating the Coinbase IPO to push them higher. We're talking about earlier PaySafe. Let's take a look at PaySafe to see what they're doing. That's one ticker symbol I like. Here we go. PaySafe, PSFE. PaySafe. You know, PaySafe getting a little bit better action than the blockchain miners. So PaySafe looking decent here. It looks like it's going for a reversal. It's been obviously, like the rest of the SPACs, in a complete downtrend for like the past month and a half. And we saw a minor pullback here, a breather, and then further going down. And now it looks like we're going to have another pullback to the upside. So PaySafe does go higher. Levels to look at is around 60-50, 60-60 level for potential resistance here. And yeah, we can see PaySafe go up the next few days. But PaySafe getting better, getting some more love here in comparison to the blockchain stocks. Mara just melting away here at 44.25. It's down 13.2%. I wonder if there's a circuit breaker here. So we see the miners getting crushed here. Let's see here. This could be a squeeze. We can see a massive reversal tomorrow and just faking people out here. Let's look at Bitcoin. Bitcoin also selling off. Let's look at the 5-minute chart. Bitcoin selling off here. It'll be interesting if we hold here above 62,395 level, and if it holds above, we have some potential to, go higher. If not, we might melt away here and go back to this 10-day moving average of around 59,000. So we'll probably lose about 3,000 points here if we can't hold some of these levels. So let's go back to Coinbase. We see Coinbase here holding above 390. So let's look at the 5-minute chart. And we see big wicks here. This is a bullish sentiment here on these candles. We're seeing a lot of fight. And when you see these wicks, long sticks below the candles, that's a bullish sentiment here. So this is possibly, we're going to see Coinbase holding above the 390 level. And we see the ends of the wicks here at 390.
Financial thing that went on in the past. So they rarely pay out any claims, but they collect a lot of money. And that's one pick that we like. And of course, there's Intel. And yes, they've had
the progress has been exponential. It feels almost impossible that that dream is coming true. But to me, this is just the beginning of a sort of mainstream moment whereby we can get normal people, finally exposed to what is the most important technological paradigm shift of our lifetimes since the internet, right? I think we're seeing, the movement of corporate structures natively onto the blockchain. We're seeing faster capital coordination using these blockchain systems than we actually see even in traditional stock markets. So I think that this is really just a tipping point. It's actually the beginning of the sort of next 10 years of technological development and societal transformation.
So where do you see Coinbase then going, Olaf? I mean, is this a threat to the Wall Street banks, the money center banks?
I do think that Coinbase is absolutely a threat to those incumbents, but the much deeper threat, so to speak, is the actual cryptocurrency technologies themselves. Using things like smart contracts, you can actually automate financial services fully with software. So we already have decentralized exchanges, decentralized lending systems that are up and operating today, processing billions and billions of dollars. The area is nascent, but it's growing exponentially. And I do think over the long term, that's the real threat to most of these big incumbents. One of the problems there is they can never compete because they're competing with a pure peer-to-peer global protocol system. It's not a business model that they can sort of emulate. It truly reinvents the substrate on which these financial services and assets are moving.
And just to build on that, Olaf, for a second, because I think for now, we are talking about the direct listing of a company largely known as a cryptocurrency exchange. But the Coinbase business is evolving, and there are other parts of the business. Is it too simplistic, in your opinion, to look at this as a trading platform for cryptocurrencies?
Yeah, I think that's very much too simple. Coinbase is sort of the gateway to what I would call the crypto economy. So they offer a kind of fiat on and off ramp so you can interact with your native banking and fiat money, cross that bridge and enter the crypto economy. Once you're inside the crypto economy, though, the sky is the limit. The amount of financial services that are out there globally available, embedded using software directly into these blockchain systems, it's really a completely new paradigm. And I do think many people underestimate the sheer number of users and the amount of capital that is embedded inside those systems. So ironically, I do think that over time, businesses like Coinbase will rely on that legacy banking bridge for a lot of their defensibility in their business model, as the actual crypto technology itself will end up disrupting most traditional financial services businesses, and even over the long enough time horizon, disrupting the corporate structure and the limited liability company structure itself. We can do capital formation and contracts between shareholders all natively using blockchain technologies. So while it's early,
Olaf, I think I saw on the Let me just jump in here. I think I saw on the T-Live blog 43 million users of Coinbase, 7,000 institutional users, so already a huge base. I wonder about your hedge fund, Polychain. Can you buy Coinbase for the hedge fund, or are you solely devoted to buying crypto? And then also, do you own Coinbase shares as the first employee?
Yeah, I mean, I own Coinbase shares personally. We're also large investors in Coinbase out of my funds that are sponsored by Polychain. We're managing over $6 billion in the crypto economy today. A lot of that is more cutting edge exotic technologies, but we're also big believers in Coinbase and long-term holders.
Olaf, thanks for your perspective on this big moment in the crypto world. Olaf Carlson, founder and CEO of Polychain and first Coinbase hire, joining us as we continue to track the intraday trading after the direct listing for Coinbase, an increase from that reference price of give or take 55%. Somebody who knows this story well is Josh McFarlane of Greylock Partners. Greylock, a past investor in Coinbase, and Josh leading that investment in the firm. Josh, nice to have you back. And, you know, before we talk a little bit about the road for you guys in becoming an investor and the conversations you've had over the years, what's your reaction to this first few minutes of trading in Coinbase?
You know, I got to just hand it to the team here for what they've built, and so appreciative to be a part of it. You know, the interesting thing about this entire space and Coinbase at the center of it is how long-term everybody is thinking about the potential here. I mean, Olaf, your previous guest, just did a nice job of highlighting what is possible across the infrastructure and how it's changing. So I really just think we're getting started.
What do you think about holders in Coinbase? How many are rushing to sell at this level, and how many are going to be dedicated to the mission?
You know, it's a really interesting question. One of the reasons that I invested in Coinbase back in 2017 was based on a lunch that I had with Brian Armstrong, where, you know, I was fortunate to be pre-IPO Google. And when that company went public, I saw so many of the people around me come into pretty substantial wealth pretty quickly. And as I was talking with Brian about this, back in 2017, we were watching the price of Bitcoin go from 600 to about 2,000. And so many of his early employees were holders of these currencies and were also coming into some substantial wealth. And so I think what's interesting about this moment in time and where Coinbase goes from here is that the company is filled with maximalists when it comes to their belief in what crypto and the crypto economy can do for the world, and not just missionaries and certainly not just mercenaries. And so I think as we look at the pages that are going to be turned over here in this company's direction, I believe that most of the people who are most deeply invested in this company and in this economy, in this new crypto economy, are really long-term thinkers about what's going to be possible. And you know, I think this is going to be a really interesting one for decades to come.
Josh, we only have about 30 seconds left. Unfortunately, you know, there's a deeper conversation we could have around scaling businesses and the actual ability to cut out the noise. There's a lot of noise on this Wednesday. In a word or two, what do you think is the game plan going forward? There's going to be a lot of attention, but you're saying this long-term commitment. So how do you keep your, I guess, eye on the prize, so to speak?
Yeah, right there, I think it comes back to why people are invested in this space, and for Coinbase, why they're working there. And I've had the good fortune of working with so many of the different people across the company in almost every capacity. And I've got to tell you, like, these people are missionary driven toward the vision of bringing the crypto economy to the world. The fairness, the transparency, the democratization, the decentralization, it just runs deep in their blood. And so I think it will be quite reasonable for them to stay focused.
Josh, thanks so much for your time. I really hope we can get you back on the program. Josh McFarland from Greylock Partners talking to us about the Coinbase direct listing. Right now, we're looking at a trade for $381 a share. John, just the same price that it listed at, or that it started to trade this morning, still worth almost $100 billion. For John Ehrlichman, I'm Matt Miller. This is Bloomberg.
All right, we saw a total fake out here. I was earlier talking about these long wicks here, bullish engulfing, staying above 390, and that just got crushed here. So now we're off to the races with the sell-off here. It's going back to 380. If we go below 380 here, the opening price, who's to say where we go from here, you know? So we broke the 380 mark. So potential here, we might go lower. There's no telling. So we take a look at the tape. We do see some buy side. Let's see here. We see it's mixed. It's mixed. It's definitely mixed. We see now we're seeing a river of red. We're seeing red here. There we go. Here's the push down. Now we're seeing a lot. I saw a lot of red before we started going lower, so it just took a little moment to react. So now there's no telling where we go from here. Now this is the thing with IPOs. We see on the tape here at 377, some heavy buys at 377.50. Let's see if we hold here at 377.55, 377. We broke the 377.50, so we're going lower. We are going lower here. Let's see if I can pull a longer chain here. Okay, we're going 376.32, pulling back. Let's look at 20 here. Let's look at 30. We'll do 20. We'll do 20 denomination here. Let's see. Big support here at 376. We have big support at 376. So we'll see if we go below 376 or if coin holds at 376. Let's see if CNBC is covering anything right now. Nope, we're still in commercials. So now we're at 375. It broke the 376. Next support, we have orders holding at 375. We break 375. We'll see. We have 375, 375.
Thinking to help your business realize new possibilities. Only one 5G partner offers unmatched network support and value without any trade-offs.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years.
His Life and Crimes premieres tonight 8 Eastern, CNBC.
Welcome to Power Lunch. I'm Morgan Brennan with Frank Holland. The Dow and S&P both hitting record highs. The Nasdaq is a laggard as we await the release of the Federal Reserve's Beige Book. We'll have a lot more on that in a minute. Plus, we are watching Coinbase beginning to trade after its direct listing on the Nasdaq just moments ago. The crypto exchange going straight to the moon. And it has a valuation of more than $100 billion already. Later, we are going to speak to the president of the Nasdaq, Nelson Griggs, about the massive direct listing. But first, Frank, over to you.
All right, thanks a lot, Morgan. Financials helping to lead the market higher today. Wells Fargo and Goldman Sachs both higher after big earnings beats. JP Morgan slightly lower. But it's the crypto bank Coinbase really captivating Wall Street's attention. Let's get over to Bob Pisani with much more on the market action. Hey there, Bob.
And you hit it, Frank. There's really only two stories today. There's Coinbase and there's those stunning bank earnings. First, Coinbase, and we got to put this in a reference for you. Just take a look at where it's trading right now. Remember, the reference price was $250. It opened at $381. It got as high as $429 million, so it's been really all over the place. But what's absolutely amazing now is the valuation, because we're talking about a valuation of about $100 billion. ICE, which owns the New York Stock Exchange, is $65 billion, so it's bigger than the exchange, but it's in rarefied territory. There's only about 85 companies that have $100 billion market valuations, and those are companies that you know all of them. But right now in that $100 billion range, Target's $100 billion. Micron is $103 billion. Goldman's $113. General Electric, which has been around for more than 100 years, is $118 billion. And the biggest financial services firm out there, BlackRock, is $120 billion. So you give a sense of the scale now of what they're trying to value this thing at with really old school companies. Truly amazing. Meantime, these bank earnings also mind-boggling.
All right, guys, we're going to switch it up here. We're going to go and look at Humble right now. This is OTC stock. If you're into fintech, this is one that you definitely want to be looking at. If you're into fintech, if you're into IPOE, social capital, the new one that came out, Alchemy, this is a stab at fintech here. So we're going to be looking at Humble here. And I'm going to enlarge this here and switch it up. Let's see what's going on here. The CEO should be coming out shortly here on CNBC. And we're going to take a look at what he has to say.
They don't care as much about trading profits and things like that. They consider trading profits a little bit more of on the low quality end. There were a lot of companies who also had significant loan loss, large releases. And Morgan, I think that's also considered a little bit lower quality. We'll see what's going on with the rest of the sectors when other stocks start reporting in the next few days. Guys, back to you.
Yeah, we have a busy next few days. Speaking of that, Bob Pisani, thank you. Let's go over to Rick Santelli in Chicago for a look at the headlines that are coming out of the Beige Book. Rick.
Yes, well, my favorite is that the U.S. economy accelerated to a modest pace. I think that really sums up the Fed. You know, there's a lot of activity going on, but it's just not quite enough. And we know that there's certain parts of the economy that aren't open, whether it's, for a variety of reasons. Some states are fully open, some aren't. But manufacturing still managed to grow a bit, even with supply chain issues. These are some of the headlines. We've seen some pricing issues.
So we take a look at Humble here, a little bit about the company. It's a mobile pay. So Humble Pay, connecting consumers and merchants in the digital economy. So a pretty cool app. It's also on your tablet, connecting merchants from around the world to online consumers. So we can see some competition here with Stripe. Humble making moves here, giving us retail investors an opportunity to buy into a stock at a reasonable evaluation at a reasonable price. It's currently trading at $3.35. We saw a massive run up here a few weeks ago, hit a high of 7.72, and now it's consolidating, finding its ground around $3, holding above 280 very nicely here. And we can potentially see Humble getting some love here with this catalyst. Once the CEO comes out, maybe you get a nice little push to the upside. What we can expect from Humble, if it holds above 260 here, 270, that would be a very strong bullish sign. And we want to see that. We want to see this consolidation and push higher. So we'll be waiting on that. Right now, they're just talking about Fed economy accelerated at moderate pace. They're talking about interest rates and basically the overall outlook of the Fed policies. So we look at Humble, some of the financial overview. Let's see what they have going on here. Digital assets investing made simple. Start buying ETX today. Block ETX provides new way to get exposure to emerging assets class rooted in blockchain, boosting Sharpe ratio and indexing against a new historical trading market. So definitely get some exposure to some crypto here. They have a subscription-based network here, which is good for us investors. They're making money, some profit here. 24/7 virtual trading bots, automatic rebalancing. So you want to get some automated trading, they have those services. I'm not sure what their premium services are, or if it's just a flat $4.99. That's something we would have to look further into. So they have a whole ecosystem here, financial ecosystem here, humble, making some moves and giving you an opportunity to buy at a great price.
The pace of price of selling prices, not at the pace of input costs. I will tell you guys, a very quick search find that the word disruption, which appeared for the first time as in supply disruptions, appears 22 times in the Beige Book this month.
All right, Steve, thanks a lot. Stick right there. We know you're still looking through the Beige Book, but right now we want to bring in our panel. John Lynch is the CIO with Comerica Wealth Management. Michelle Myers, the head of U.S. Economics at Bank of America Global Research. Both of you, thank you so much for being here. I know you're just looking through the Beige Book right now. Michelle, if you don't mind, let's start with you. Let's touch on something that Steve actually just talked about, input cost. What are you seeing in the Beige Book so far and how companies are handling that? Are they raising prices or are they absorbing those costs? And how do you see that impact in the markets?
So I think Steve summarized it perfectly, which is that the Beige Book expressed that input costs are rising for a variety of different sectors, particularly manufacturing, construction, the good side of the economy, where you have these types of supply chain disruptions and where you've had a whole lot of demand in the last year, which has created these types of imbalances for those types of items. Now, when you think about what happens with those input costs, the Beige Book is noting that some of it is being passed on to the end consumer. And that's actually very consistent with what we're seeing with the reported inflation data. If you look at yesterday's CPI report, core goods prices were up pretty notably, not to the same extreme as we had seen for things like lodging away from home or transportation services, which have to really rebound. But, core goods prices have been rising for the last 6 to 9 months, and in the last report they increased further, which I think is indicative of some of these input prices being passed on.
John, turn it over to you. Right now we're seeing stocks turn a bit lower after the release of the Beige Book. I want to talk about your GDP forecast. For Q1 you have it at 7%, for the full year at 6%. I know you're just looking through the Beige Book right now, but so far are you seeing anything that might lead you to revise that forecast?
No, I think we'll be pretty consistent with it. And to Michelle's point, we're seeing the consumption data, we're seeing the manufacturing data. I just think when you factor in the stimulus data in the first half of the year, it's definitely going to be front end loaded, if you will, for 2021. I'd like to see capital investment pick up in the second half. And even if that does, if you're seeing 7% growth in the first quarter, maybe 6% in the second quarter, we may be disappointed with only a 4% pace of growth in the fourth quarter, which kind of characterizes these last couple of years. 4% is still an excellent number, but just a gradual reduction, or as the Beige Book said, accelerating at a modest pace, will be a little more modest in the second half of this year.
So, Steve, when you take the Beige Book today, you couple it with what's been another tidal wave of a week of Fed speak, including Powell earlier today, is there anything that we've seen or heard that would change the message, not change the message, I think they've been pretty consistent, but would change the market's interpretation of the message from the Fed right now?
I don't think so. And while I'm reading the Beige Book, I'm trying to think about what you can't really know, right? Which is, what would a Beige Book look like after the economy emerged from a pandemic? And it's impossible to know, but you can sort of game it out, right? You would see an economy coming back. You would see robust activity in sectors that were the hardest hit, leisure and hospitality, potentially tourism. All of those were good signs. It would not also be crazy to expect supply disruptions. By the way, Philadelphia calling them severe. Other central banks said they were widespread. Because, why is that? Well, the manufacturers are suffering the same kind of problems that retailers and the schools and everybody has. Not everybody's back to work. So the whole global supply chain is not back up. So a lot of this is to be expected. And the reason I'm answering your question this way, Morgan, is that this is the outlook that I believe the Federal Reserve expects. They expect there to be these kind of bottlenecks. They expect there to be pricing pressure in sectors that come back quickly, especially without the labor to provide the services that are demanded by the pickup in demand. You also have a lot of stimulus out there in the economy. So I don't think this changes very much. Powell today in his speech at the Economic Club of Washington was very clear that, look, we're looking for a variety of things to be in place. We want to get people back to work. We want to get inflation above 2%. We're on the road. We're having some inflation now, but I don't think this changes the Fed's outlook. I know they'll be keeping an eye on it, though.
Michelle, the labor piece of this. I mean, we had Domino's, for example, one of a number of CEOs and companies that's been on our air lately. We had Domino's on the show earlier in the week, said it's a quote-unquote tight labor market and that it's competitive trying to hire enough people to come in. When you take some of those types of comments that we're getting from employers right now, particularly employers of people that are maybe on the lower end of the pay spectrum or getting paid on an hourly basis, and then you couple it with what we're seeing in the Beige Book today, what is the takeaway there in terms of the labor market and how tight it actually really is right now?
Well, it's certainly the narrative from today's Beige Book, where there's evidence of labor shortages or difficulty finding labor, particularly for some of the lower skilled, lower income jobs. But I tend to think it will prove to be somewhat temporary.
Transitory?
We know transitory is the word. Yeah. And, you know, we saw a big drop in the labor force participation rate on the back of COVID. We know that a lot of people left the labor market because of concerns over health or concerns, you know, of taking care of children, et cetera. And the hope is that once we get past that, once you're at a level where the economy is considered safe enough, people feel comfortable re-engaging, they will come back in, especially once the impact from stimulus and the social safety net start to fade. So I think going back to Steve's point, when you kind of put it all together and you think about what this means for the Fed, it really is a question of how much of this is transitory versus sticky in the economy. And I think from the Fed's perspective, they're assuming a lot of this is temporary. They want to see how it plays out, and they're not going to adjust monetary policy based off of some of the data or the anecdotes that we're seeing right now.
John, before we let you guys go, taking a look at stocks right now, we're seeing stocks going. Hey, Steve.
Yeah, no, I was just going to absolutely go ahead. I was going to comment on exactly that. Go ahead. What's your question?
Two minds thinking alike there. John, before we go, stocks trading lower after the release of the Beige Book. What do you think investors are seeing? I know one data point you brought up is that the S&P equal cap weighted outperformed the cap weighted index in Q1. We're seeing the Beige Book. What commentary do you think is driving the markets lower right now?
I think, you know, in spite of all the insight that we've just shared on interpretation of the Beige Book, I think it's very important to see how the market's interpreting it, right? And if you look at exactly that, equal weighted index had been outperforming the cap weighted index for the first 3 months of this year. For the last 2 or 3 weeks, that has changed. That dynamic has shifted. And I think it's fascinating to think about, you know, or did we see a peak in services? Did we see a peak in manufacturing? 900,000 jobs? I mean, the minute we got that, literally close to the minute we got that data, the 10-year peaked, and cyclical leadership kind of halted back toward the FANG stocks, Big Five. So it's going to be very curious. That could be an interpretation of everything being priced in. It could be a concern about viruses, the virus variants. It could also be a concern about tax increases in 2022. Even though the market, I guess the Dow's at a record now, be very cognizant of the fact that leadership underlying the markets has changed. And I think that'll be a very important development in these coming weeks.
All right, Steve Leisman, we're going to give you the last word.
Very quickly, I was just going to say, I find it interesting that stocks have reacted, but not bonds. If you look at what's happening with the 10-year, it's slightly down. If there was an inflation concern in the market, it would show up, you would think, more acutely in the bond market. It's not showing up there. Perhaps that's to follow in the minutes and the moments to come. But right now, looking at it's stocks that have taken it on the chin with this Beige Book, assuming there's some kind of overriding inflationary concern, or maybe there's a pricing pressure issue where the feeling is that input costs go up, but companies cannot pass it along, and that ultimately is bad for profits.
Yeah, key point you make there, Steve, especially with the NASDAQ in particular at session lows right now. Thank you all for a great panel to kick off the show. John Lynch, Michelle Meyer, and Steve Leisman. Coming up, Coinbase starting to trade in the last hour, opening at 381, but it is below the debut price right now. It's about 369, 368, up 47% from that so-called reference price. We're going to have more on the action. Plus, later this hour, we'll speak to the president of the NASDAQ, Nelson Griggs, about what's being called a watershed moment. So much more Power Lunch after this.
All right, I'm going to pause it here during commercials. Let's take a look at some ticker symbol, guys. Type it in there. Let's look what's going on here. Coinbase selling off, crypto selling off here slightly. It could be short-term noise. We can go higher. If we look at some of the other blockchains like Riot, we see Riot here also selling off here. Massive down move, 15% now. Let's take a look at Mara. We see here Mara down right now as well. Oh, this is MasterCard. That's not Mara. So let's go to Mara here. Mara is down 15% as well. So we're seeing right now crypto stocks selling off. So it was buy the rumor, sell the news. So once the news fruitions, you start selling off. I sold my crypto yesterday. If you're on my Discord, I send out an alert about selling crypto and just holding off for a downturn. And that's exactly what's happening here. What else do we have here? If we look at PaySafe, let's look at PaySafe here just to see what it's doing. PaySafe pulling back here. Actually, PaySafe held strongly and rallied up. So PaySafe actually performing better. Here in the chat, we have CleanSpark. Let's see ticker symbol CLSK. That is not CleanSpark. That is Colgate. Okay, here we go. CleanSpark here holding at 21.94. Let's look at it had a nice little rally in anticipation for the IPO, not cooling off. Big wick there. Let's look at the 5-minute chart. We see the 5-minute chart pulling back. And now Humble CEO should be coming out on CNBC. We're waiting on that potential interview. And we'll be looking at Humble as well, an over-the-counter fintech stock. Right now, it's stabled at 338. It hit a low of 331. And we saw here a nice bounce here. This is bullish. This is a good sign. So we're holding this 3.32 level here very nicely. So it seems like it's just lingering here, cooling off, waiting on this catalyst on the news of to see what the CEO has to say here. So we're waiting to see some nice price action. Let's take a look at Dogecoin. That was another one that was on a massive tear. So Dogecoin right now pulling back heavily. It hit a high of 14 cents, currently trading at 12 cents. Huge wick here. Potentially we can go back to 0.073 here on my moving average. So let's take a look there on the 5-minute chart. And yeah, big pullback. Okay, we're back on.
Disruptor list, a crypto trading company, she said, making its public debut. Shares jumping to $400 a share, up from the reference price of $250. Coinbase CEO Brian Armstrong spoke to CNBC about the major moment.
That's why we call it the crypto economy. It truly is a new economy. It has now hundreds and thousands of companies being created in this space. So I think hopefully Coinbase going public and having its direct listing is going to be viewed as kind of a landmark moment for the crypto space.
For more on Coinbase, joining us now are Michael Buchella, Block Tower Capital General Partner, and Sarah Kunst, Clio Capital Managing Director. Good afternoon to you both. Thanks for being with us. Sarah, I'll start with you. Key metrics, I guess key things to keep in mind given the valuation of this company and that there seems to be such a bull-bear debate around it.
Yeah, I mean, the thing that is not debatable is that this is a huge success story for crypto overall. And what we're seeing here is the first major IPO, the first IPO ever really, for a crypto company, for a crypto exchange in the US. And, I think that no matter what happens with their stock price minute to minute or over the next few quarters, this milestone is the first of many, and crypto companies are here to stay even in the public markets.
Yeah. Michael, I'm curious how you see it because in so many ways, Coinbase has been seen as and is expected to trade, at least in the near term, kind of alongside Bitcoin, the moves we see in Bitcoin and even Ethereum. In that way, it almost feels a little commoditized the way you see energy stocks trade alongside crude, no matter what the underlying story of those companies are. The flip side of that is that longer term, this is seen as potentially sort of the next driver of a new era of internet infrastructure. How do you see it?
Yeah, so I mean, trading right now around $365, you're looking at just shy of 100 billion market cap. It's tough to tether that to any trailing 12-month numbers. I think what you're taking a bet on is a fully integrated cryptocurrency company. It's one of the few that will ever exist, certainly the only one that's public right now. And you're taking a bet on the future of Brian Armstrong and the team at Coinbase and their ability to grow, both organically and now through an acquisitive format, through very richly valued equity, which, I don't think we can discount how important that is when rolling up an industry. If you think about Salesforce in the CRM space and what they're able to do, I think this is a very good analog to that. And with respect to, being a sort of beta for crypto, there is enormous operating leverage within Coinbase. So if you think about their fee revenue model, it's primarily crypto driven. So fees are collected in crypto. So, you had an acceleration in fees plus the acceleration in price gives you this almost levered beta to the space.
Sarah, turning back over to you. We're looking at this eye-popping market cap for Coinbase, over $100 billion. A lot of this company's valuation has been tied to the rise of Bitcoin, but also in the idea that it's a safe platform to buy and exchange Bitcoin. Cybersecurity, it's a risk for all companies right now. Does this company have any other moat or any other way to fend off competitors besides the sense that it is safe?
I mean, it is safe. And we've seen Coinbase, they've never had a major security breach. That is huge. If you think back to the Mt. Gox days where it was common to wake up in the morning and an entire exchange disappeared overnight from bad actors or from hackers. So they definitely have that advantage. They also just have a lot of accounts. They have over 45 million accounts already. And so the leverage there beyond just even crypto, but the leverage to say, look, maybe at scale, Coinbase looks more like a neobank. And they say, if we can keep crypto safe, we can certainly keep your deposits safe. We can certainly be, trusted with your debit cards, with your credit cards. And we're already seeing some moves in that direction. So, the security piece is huge, but I wouldn't underestimate how much of a moat they have just by the sheer number of accounts that people have created.
Michael, the institutional piece of this, as we see more of these types of investors adopt or warm up to Bitcoin and cryptocurrencies in general, just how great is the runway and the trajectory for growth as you see that adoption rate potentially begin to accelerate?
So enormously, and Coinbase is very squarely one of a handful of counterparties that most of those institutions are willing to work with. So we've seen an enormous uptick in institutional demand. Most of these folks are going to be allocating over a long period of time, going from 0 to some number of basis points, 20 basis points, 1% of their portfolio in this space. There are very few players that they're actually going to work with. And I think that counterparty risk moat is enormous for many folks in the space, Coinbase, Fidelity, a few others. So you're going to see kind of this natural shelling point of a few of these industry behemoths take hold. And Coinbase is certainly a beneficiary of that.
Finally, Sarah, we're talking about Coinbase right now, but Gary Gensler is just taking the helm at the SEC today as well. Obviously has taught courses on it and seems to understand cryptocurrency. What are your expectations around more offerings, the possibility of, say, a Bitcoin ETF as well, now that we have a new leader at the helm there?
Yeah, I mean, I think that it's very much reasonable to assume that in the next 12 to 24 months, we will see the first U.S. ETF of crypto. Gemini has tried this several times. Others have tried. I believe Skybridge has tried. And we have them in Canada. We see them in other countries. And as more institutional investors get more interested in investing in crypto and retail investors, I think that the ETFs are inevitable and will just continue to grow, the overall market cap of crypto, which currently sits at around $2 trillion total, with about half of that, $1 trillion, being just Bitcoin.
All right, thanks a lot, Michael Busella and Sarah Kuntz. We appreciate the insight on Coinbase. Thanks for being here. Still ahead, we're watching the markets with stocks at record highs, even though they took a bit of a dip after the release of the Beige Book. Energy is still the best performing sector, with oil soaring by 5%. We'll have much more on that right after this quick break. Stay with us.
There's more to investment than money, which is why we don't just invest in business. At the Public Investment Fund, we invest in something far more important. We invest in people. We invest in human ambition, in human futures, in human success. Because we want a brighter future for everyone. Public Investment Fund, funding new human futures.
Allergy sufferers. Bedtime means it's time to take Zysol. Zysol relieves allergies while you sleep, so you wake refreshed. And in a clinical study, after just 1 day, 90% felt powerful 24-hour relief. So, be wise all. Take Zysol.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
At Amica, we believe in life's extraordinary experiences. We're an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
What if you could have the perspective to see more? At Morgan Stanley, a global collective of thought leaders offers investors a broader view. We see companies protecting the bottom line by putting people first. We see a bright future, still hungry for the ingenuity of those ready for the next challenge. Today, we're translating decades of experience into strategies for the road ahead. We are Morgan Stanley.
He was the biggest con man in history.
We lost 95% of what we had.
He sold his soul for the buck.
Bernie Madoff, His Life and Crimes. Premieres tonight, 8 Eastern, CNBC.
Welcome back. Time for today's Power Movers. And look who's back. GameStop jumping as the company plans to retire more than $200 million worth of debt. Today's gains, they stop a 7-session losing streak for GameStop. And now to Discovery. Shares are lowered today. Our David Faber reporting Credit Suisse is still unloading millions of shares of Discovery as part of that fallout from the collapse of Archegos. And last but not least, Bed Bath & Beyond down 10% today. Earnings, they were better than expected, but sales, well, they were below expectations. So this stock not going to the moon, Morgan.
Ooh, that is the perfect opening for our next discussion here. So take a look at this. Just a short time ago, Jeff Bezos' Blue Origin launching a test flight of its suborbital New Shepard rocket and capsule. See that right there. It relanded that rocket booster again. The capsule, which you saw on top of the rocket there, will eventually carry paying passengers to the edge of space. No one was on board today, but as the vehicle climbed above the Kármán line and then landed with parachutes in the West Texas desert, today's test is considered really a dress rehearsal as astronauts did exercises before and after the flight. The goal, of course, is to eventually carry people to the edge of space, and with another successful test flight under its belt, Blue Origin now appears to be that much closer, potentially in the coming weeks or coming months, to actually start putting people on board this system.
Wow. Do you ever watch John Oliver?
I do.
Okay, he said Blue Origin is the reason why Jeff Bezos is basically Lex Luthor. You gotta watch
I
the
haven't
clip.
seen
Google
that one.
it.
I'll have
It's
to
a pretty
watch
funny
it.
joke. I'm only gonna ruin it if I try to tell it, but it's hilarious.
Okay. Well, we'll keep an eye on Blue Origin and I guess Lex Luthor too. Ahead on Power Lunch, cashing in on the NFT craze. One company is betting big on digital sports memorabilia. Their stock making a crazy climb since going public. The CEO is going to join us next. Plus, speaking of digital assets, Coinbase begins trading, soaring from its reference price, but slightly below where it opened. We're going to speak with the NASDAQ president about what this listing means for the market. All when Power Lunch returns.
We put a lot of stress on our feet. It's no wonder they ache. Introducing Arch.
So we are seeing here crypto continue to sell off. We're at 360. It broke the opening, and now it looks like we're going down to about 300 here. We'll see if it holds the 350. If it holds 350, that would be a good sign for Coinbase. If not, potentially going down to 300. So we had a nice bullish run up here to 430, and now we're going down to 360. And crypto across the boards, blockchain miners, Riot, Mara, Bitcoin itself, Ethereum, Litecoin, Dogecoin, everything selling off right now. It could be short-term noise, or it could be something. It could be something of the beginning of something. But overall, if you're an investor, long-term investor, I mean, this is just short-term noise. But we can continue to see a sell-off here. Bitcoin hit all-time highs today, and euphoria is high. There's a lot of excitement, and for those people who bought at the top, they're going to try to squeeze them before we go higher. So just be careful out there. This sell-off will continue. We'll see if we hold above 350, but there's no telling.
Open your account today at Westcom, where it's all you all the time.
No, I've been staying at my dad's place because of everything.
Where are we going?
He's good. Yeah, I know, we keep missing each other. I've been working out of my dad's house, doing some reading. I should be working out more. I just feel like I'm drowning.
Navigating these times can be tough, but while you care for your loved one, you also need to care for yourself. Go to aarp.org/caregiving for free mental health and self-help tips.
So you can be your strongest. Tonal, now at 40 Nordstrom locations nationwide.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to Ownerly.com, enter the address, and see the home value. Come to Ownerly.com and see what your home is worth for free.
Welcome back. I'm Rahel Solomon, and here is your CNBC COVID update at this hour. Dr. Anthony Fauci is stressing today that the national pause for the J&J vaccine was done as a precaution and that all the COVID vaccines authorized in the U.S. are safe. He's also urging people not to see the temporary halt as a reason to avoid getting vaccinated entirely.
So as opposed to looking this as a negative safety issue, it could be looked at as a positive issue where they know that when we let a vaccine be available and give it a go-ahead to be put into the arms of the American people, we do it with a considerable degree of confidence as to its safety.
And Nevada will drop all social distancing guidelines on May 1st. Governor Steve Sisolak says that he expects every county will be able to fully reopen at 100% before June 1st. But he does want everyone to know that the statewide mask mandate does remain in force. You're now up to date. Morgan, I'll send it back to you.
Rahel Solomon, thank you. Markets right now rebounding a bit from the move lower after that Fed beige book. As you can see right there, the Dow is hanging on to some gains here, up 110 points right now, thanks in part to bank earnings, those numbers from the likes of Goldman Sachs. The S&P, though, did turn lower in trade today. It's down about 0.2%, 4132 is your level there. And the Nasdaq is the underperformer. It's down about 0.6%, so off the lows that we saw just a short while ago. Meantime, today, though, it is a big day for oil. Energy stocks are getting a boost, too. Josh Lipton has the closing numbers for us. Josh.
So, Morgan, oil prices surging today. WTI and Brent crude prices finishing the day higher by nearly 5%. This is coming after the Energy Information Administration reported that U.S. crude inventories fell by 5.9 million barrels last week, a bigger than expected decline. Elsewhere, the IEA expecting a rebalancing of global oil supply and demand in the second half of the year, saying producers may need to pump an additional 2 million barrels a day to meet the rebound in demand. Both reports boosting optimism about increasing demand for crude. The energy sector, the best performing sector in the S&P today, up 3%. Back to you all.
All right, thanks a lot, Josh. Well, that NFT boom, it is showing no signs of slowing down. Sales of non-fungible tokens, they soared more than $2 billion in the first quarter alone with, get this, twice as many buyers as sellers. and the CEO of newly public Coinbase, weighing in on that trend.
Well, it's kind of having a moment right now. So there's a lot of NFT craze happening. And something like this, by the way, is happening in crypto. It seems like every 6 months, there's some kind of new innovation. So I think this is going to be like the internet, where there's like, or fashion, there's sort of like a new trend that happens periodically. And NFTs is the most recent one. But generally, I'm a fan of NFTs. I think it's really cool that it's making it possible for artists to get paid.
And one company cashing in on this craze is Humble. Look at this chart, a crazy climb since going public just a few months ago. This blockchain firm works with athletes to mint and then sell NFTs, partnering with sports agencies like Athletes First to sign even more pros. For much more, let's bring in Humble co-founder and CEO Brian Foote. Brian, thank you for being here.
Hi, everyone. Thanks for having me. I appreciate it.
All right, we appreciate it. Brian, you got to loosen up, man. It's not that serious. All right, thanks for being here, my man. So NFTs, obviously a red hot craze, and so is retail investing. So many retail investors out there. So a lot of people are looking to your company for some exposure to NFTs. So if I buy a stock of Humble, how much exposure do I get to NFTs, and what kind of NFTs are you selling and putting out there?
Yeah, so I think, you're going to see really curated verticals coming online. I think, to Brian's point at Coinbase, and by the way, congratulations to those guys, big day for digital assets. I think, what you'll see in the space is you have sort of these, theme park versus gallery moments where, to Brian's point, there's going to be a lot of proliferation of these ideas and how people get access to them. And then over time, I think, the artists, the athletes, even large media companies will start to consolidate that behavior into kind of one click for the customer in a way that they can get a sense of price discovery, what the market's going to be worth, and how people want to package their lifetime catalogs of content. I think it's a really exciting space, and we intend to package it up well for the customer.
So Brian, we're going to show a couple of your NFTs. I know one of them that you're really highlighting is one for MLB All-Star Nelson Cruz. You have another of other sports figures like the Packers, Aaron Rodgers, the Cowboys, Dak Prescott. So kind of give us a sense of where you see this NFT craze going, and do you see it mostly growing in the sports field, or are there other places where NFTs can see a similar boom?
Yeah, I mean, I think, again, we're starting to experiment with ideas. So, nothing set in stone with who we're working with and how, but, we're exploring ideas that we're proposing to customers and to athletes and to artists and so on. So I think for us, we're, in a spot where the market will discover where it wants to be. And if we can package that really well in a way that the artist and the athlete says, yeah, that's something I want to be a part of, or media companies start to see a second life at the box office for things, that's already cataloged, like movies or music, we think there's a really strong opportunity for lifetime collectors to create new markets beyond stocks and bonds for trading on the blockchain. So it's a really exciting time, and we intend to package it well so that you can move from a hype cycle into something that's lasting and meaningful for creators and anyone who's a producer of content.
Yeah. Brian, it's Morgan. I'm curious, about the company itself. You did this reverse merger. The stock chart's bananas. I realize they're coming from basically being a penny stock to where we are today. But you got three main businesses that I'm looking at here. Pay, so the mobile payments. You got the marketplace. You got the financial, which houses these investment vehicles around Bitcoin and cryptocurrencies. But I haven't seen any SEC filings as of late. No earnings or financials released either. Are you generating revenue? Are you making money? How quickly are you growing?
Yeah, so we're a new company, and we did something novel in terms of going public on the OTCs. Our intention always is the NASDAQ to move up and into that marketplace. So for us, we saw an opportunity to get our foot in the door as a stair step to the NASDAQ and to grow our brand for customers and make that available early for people who wouldn't traditionally get in on an IPO. You see a lot of choke points with IPOs and with the FANG stocks, with people who have access to deal flow, and then the majority of the population that doesn't. So we wanted to do something novel. I think the market is saying to us, as long as you show up to work every day and try to package blockchain into one click for the customer as an Amazon of assets, we'll be there behind you. So our intention is just to work hard and try to package something up for the customer that's really meaningful and packages these new technologies like blockchain into one click, whether it's NFTs or ETXs. We recently purchased created an agreement to purchase a ticketing business where we think there's just going to be this consolidation in blockchain that tokenization allows for.
But are you actually generating revenue yet? And if so, which of these businesses, I guess, represents the greatest growth opportunity?
Yeah, so excitingly we are. We just launched these ETX products that function as a basket of diversification on top of digital assets. You know, the millennial and the Gen Z consumer is saying, we're willing to invest in digital assets. We're hunting growth and new opportunities. So we wanted to step in there as sort of a layer on top of these exchanges to start giving people portfolio exposure to the digital asset class. So yeah, we're getting thousands of new customers, and we have revenue coming in from that. And our intention is to keep driving forward, both on the ETXs and the NFTs. So we're generating revenue, thousands of new customers, and very exciting time for us.
All right, Brian Foote, CEO of Humble. We're going to have to leave the conversation there. Thank you for being here.
Likewise. Thanks for having me. I appreciate it.
Morgan.
Shares of Facebook are up 70% in the past year, but that literally looks like nothing compared to the 360% gain from Snap. So which social media stock should you friend for your portfolio? Boom, boom. Our traders will weigh in.
Which one should you block?
Ooh.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
It used to be the brainstorming required a whiteboard and squeaky markers. But when you have devices that let you collaborate in real time from anywhere, the future works better. Microsoft Surface devices with Teams, orchestrated by CDW, enable employees to stay productive when working together with high-quality audio-visual features designed for natural collaboration, so your team always captures every detail. Microsoft and IT orchestration by CDW. People who get it.
A digital world demands digital currencies. Unlock the potential of Bitcoin with Grayscale Bitcoin Trust, the world's largest Bitcoin investment vehicle. Go digital. Go Grayscale.
Walter, did you know Geico could save you hundreds on car insurance and a whole lot more? So what are you waiting for? World's strongest man, Martins Litzis, to help you break down boxes?
What am I gonna do to you, Box? Let me break it down for you. Oh!
All right, let's continue here back to Coinbase. So we see a continuation of sell-off. 350 is the mark we want to see. We have some big orders here at 350.50. And if we break 350, we basically broke the water here, and we're probably going to go down to 300. So let's keep looking here. And let's see crypto across. Big sell-off. Riot down 14%. Holding it strong here at 49.46, pulling back here slightly. So it looks like we're going to have a down day, a red day for crypto and Coinbase. But it could just be attracting the bears. So this could be a short-term bear squeeze. Don't be fooled. So the next few days are going to be interesting. If we have a follow-through here on the sell-off, that is going to be dangerous for the next coming weeks. If tomorrow, the day after we hold these levels, then it was just a orderly sell-off, just profit-taking, nothing too crazy, but going to be interesting. Let's look at Mara. Yeah, Mara, same story here. They sold off. So we have 1 hour left here, power hour. So we're going to see what happens from here. Power hour, see if we get some action. But I think I'm not going to expect much out of the day here with crypto. We have Bitcoin pulling back. It can come back down to my 10-day moving average here. Come back down another 3,000 points. So it's going to be interesting the next few days. I think it's due for a breather. It hit all-time highs today with the hype. and
it is a brewing battle
probably
between
going to go
two
back
top
down.
social stocks. Wedbush upgrading shares of Snap to outperform, cheering the company for its innovative platform and younger skewing audience, while downgrading Facebook to neutral on growing concerns around user privacy. Snap is outperforming Facebook so far this year, so what should investors make of this call? Matt Maley and Miller Tabak, Delana Saparu of New Street Advisors are your Trading Nation team today. And Delana, you don't agree with this call. You think Facebook is a good buy. Tell us why.
Yes, Seema, I am friending Facebook, and I would block Snap here. I think there's a couple reasons. The Wedbush analyst report talks a little bit about the privacy concerns, which I think we're going to see ad revenue stay where it is, at least be maintained, obviously grow. But there's also a way for Facebook and a lot of these social media platforms to grow and diversify revenue, which is we're looking at the subscription-based model, which I think will be rolled out a lot more. You saw that Instagram is rolling out a tipping feature for about 50,000 creators who allow them to tip. And this is an area where you're going to see social media platforms getting revenue from this, right, as being the middle person for that. So I think there's still room to grow for Facebook. Obviously, Snap has had such a great run. I wouldn't be chasing it here.
And looking at the charts, Matt, you say $3.15 a share. That's a key level to watch for shares of Facebook. Why is that?
Well, it's funny because both charts look pretty good, but I agree with Delano that Facebook has the most upside potential here. I mean, the stock's been stuck in a sideways range for 8 months, and whenever you break out of a long-term range like that, it usually sees a good run. So last week we broke slightly above it. It's pulling back a little bit this week, but that's okay because it got overbought on a very short-term basis. Now, if it can bounce back, and it may pull back a little bit below 300, that's okay. But if it breaks above that 315 level that you mentioned, it's going to attract the kind of momentum money it hasn't seen in many months, confirming the breakout, and it's really going to skyrocket higher.
Facebook down about 2% today. Matt and Delano, thank you. We are smack in the middle of big bank earnings. Get trading tips and more on our website. Morgan and Frank, back to you.
Seema Modi, thank you. Coinbase is the big story of the day, meantime, soaring from its reference price at $250, but compared to its opening price of $381, it is losing some steam here versus that price. It's trading around $350, $351 right now. Coming up, we're going to talk to the president of the NASDAQ about Coinbase's direct listing and a lot more. Stay with us.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
For entries into breakouts, some traders use...
All right, we're in a commercial break. Let me know if you guys want to look at some ticker symbols, some stocks, throw some names at me. We can look at Palantir. They had their presentation. So we saw a nice run up as well on Palantir with a sell-off here. Now we're back down at 24. Let's look at the dailies here to see the overall picture. Holding strong here on my 10-day moving average. So Palantir just trading within a range. Nothing extravagant, nothing too bullish, nothing too bearish. Basically just holding within this range. So we're seeing a lot of the lower cap stocks and SPACs, even though this is not a SPAC. We're seeing the same chart pattern. This actually looks very similar to CCIV. Huge run up, sell off, pull back, sell off, and then this is where we're at now. So let's just take a look at some Pershing Square Holding here, PSTH. Seems like they're having some problems. This is Bill Ackman's SPAC at 24.63. Something probably didn't work out for them. A deal probably fell off. So they were supposed to announce a merger very soon. Bill Ackman has a second SPAC that he was going to release, and he said on one of his tweets that he was not going to release a second SPAC until he announced the first one, and he hasn't announced the first one. So I'm sure he's having a little bit difficulties there. Some trouble there with PSTH. Let's look at how about some Workhorse. I actually like Workhorse. I like their story, but unfortunately the contracts and all the negative news, negative catalysts, recent catalysts, it's down to 1272. Something worth looking at. Let's look at NEO as well. NEO here holding above $35 level here, possibly coming back down. We're not sure how long this sell-off is going to continue here. We see NEO at 37.20, and it just seems sluggish. I don't like selling options, but during these market conditions, I had to. So now I'm selling put credit spreads. and possibly some put call spreads as well, just to hedge some of my put credit spreads. And I'm just looking into selling some spreads right now. So that looks like what makes sense to me. We're not sure how long this is going to last. There's a lot of bullish catalysts and news out there, especially with Jerome Powell saying that interest rates will not go up until 2022, but the market will, twist his arm if necessary. It's not when he says, it's when inflation comes. Chris, let's take a look at Skills. Skills is another one. I have Skills, and Skills is at 1567. We haven't seen these levels until, what is this, January. We didn't see these levels until around December to be safe. So Skills trading at these levels. Okay, let's go back to the news.
Above their reference price right now, trading at $3.43 a share, but still off their best levels of the day. Coming up, we're going to talk to the president of the NASDAQ, Nelson Griggs, about Coinbase and the rise of direct listings. And while there is a lot of attention on Coinbase today, we cannot lose sight of those bank stocks driving the Dow higher, record high today, though off the best levels as well. We're going to be right back.
Just like I anticipated, a sell-off. So this was definitely what we saw before. There's a lot of hype. We see a nice market rally into the news and then a massive sell-off. So not surprised here. I was being cautious. I sold my crypto yesterday. I didn't want to have any overnight exposure or any surprises. So I don't have a lot of investments in crypto. I do like crypto. It's very small. I don't have much in it, but I did pull out my investment yesterday. So right now that investment is sitting on cash. I bought GUSD, so that's Gemini's dollar, earning some interest, and just sitting on cash right now on my crypto account. I do plan on buying back. I like Ethereum and Litecoin. I think it has more potential for growth, especially Ethereum with NFTs and their smart contract technology. The one thing that worries me about Bitcoin is Satoshi, the secrecy of Satoshi and him owning a large portion of Bitcoin. If Satoshi were ever come out publicly or sell off his Bitcoin, that would hinder the supply very largely and the price of Bitcoin. So I don't like that power of Satoshi having over Bitcoin. I do like cryptos, but I kind of steer away from Bitcoin. I do like Ethereum the most. I like what they're doing. I like their technology. So Ethereum is one that I do like, and Litecoin. I believe Litecoin also will be part of PayPal's currencies. So I think a bit bullish on that as well. So Coinbase here continues to sell off. 332, Coinbase 332. Let's look at some of the blockchains again. Yep, the selling off will continue until the close of the market. It doesn't look like they're going to have much of a chance here. Yep, with the sell-off continues across the board. Let's look at the actual cryptocurrencies here. We have Bitcoin going down. We're going to see Bitcoin. I'm sure we'll see Bitcoin back to 60,000 by tomorrow or the day after if this continues. Let's see Ethereum here. Ethereum actually holding pretty nicely here. Doji candle. So not too shabby on Ethereum. Let's see some Dogecoin. Dogecoin, massive pullback here. 0.14 cents, now at 0.12 cents.
NASDAQ's largest ever direct listing. It's the largest ever direct listing period. The reference point was $2.50 a share, but Coinbase opened at $3.81. Is now trading at around $3.35 a share. For more on the historic moment, we're joined by Leslie Picker and Nelson Griggs, president of the NASDAQ Stock Exchange. Leslie, take it away.
Thank you, Morgan, and thank you, Nelson, for joining us today, and congrats on the execution of this direct listing. As Morgan mentioned, it's the biggest direct listing ever by market cap and the first large one for NASDAQ. Interestingly, you've done some smaller, about a dozen smaller direct listings, but the bigger ones that we've tracked, Spotify, Roblox, Slack, Palantir, all went with the NYSE. So, what has changed? Why were you able to bring Coinbase to the NASDAQ? And do you think that the fact that a $100 billion company was able to successfully execute a direct listing will portend more large companies to pursue this method of going public?
Well, thanks, Leslie. Thanks for having us on. Truly a watershed moment for Coinbase, for crypto, and for NASDAQ today. We've been working with companies and talking to companies about direct listing for a while. So for us, it was really a matter of time until we were able to participate and have a large one on NASDAQ. But to have it be Coinbase, to have it be the largest ever, is really a fantastic moment for them and quite frankly for us as well. It was a very, very smooth process, and I do think to your second question, as the last few years have gone by, we always have a handful of direct listing conversations going on, but probably more now than ever. I wouldn't say it's anywhere near replacing the IPO, or that we also see a lot of popularity in companies thinking about the SPAC process, but clearly direct listings are here to stay. And we do anticipate seeing more of them at NASDAQ.
Do you expect to see the Coinbase listing today as a signal to other companies in the crypto economy, as Coinbase calls it in its prospectus, to go public? Do you think it's a signal to other companies in the crypto world that listing on the NASDAQ is a good idea? It's a good idea to become a public company.
Yeah, well, Coinbase is obviously the category creator. They are the first one of its kind. They have an amazing brand, so well known. So if you are, in the crypto space, if you are a crypto exchange, you clearly look at this moment and understand that it is possible. There is certainly investor appetite. So although I wouldn't comment on any specific conversations we're having, clearly this level of excitement around this transaction should lead to more interest.
Now, Nelson, we have the share price on the screen there at $332 a share. It's well down from where it opened up, about $381 a share. At that level, it implied a $100 billion valuation, which we've been pointing out means that Coinbase is worth the equivalent of a NASDAQ and an ICE, the parent company of the New York Stock Exchange, combined. So with that said, obviously, you're listing Coinbase. You welcome them, onto your listing platform. But how do you see Coinbase as a competitor? How do you see crypto trading in general as with regard to the exchange industry?
Yeah, well, they're clearly a very different company than who NASDAQ is. So over 55 million users are registered users they have on Coinbase. It is clearly a different asset class, and where NASDAQ is today, obviously this is a growing asset class, growing interest in it. So we are participating, hopefully, with more listings, the ETF market. We do provide some of our trading technology to crypto exchanges, but we don't sit here and view a Coinbase as a competitor.
Hey, Nelson, this is Frank Holland back at Inglewood Cliffs.
Hey, Frank.
Congratulations on the Coinbase IPO, obviously a big win for the NASDAQ today. But earlier this year, you didn't get the Roblox IPO, you didn't get Coupang. Do you think that today reestablishes NASDAQ as really where tech companies should list?
Well, I appreciate you asking the question. This year we'll have, the companies are going to raise $1 billion or more. We'll have 70% of those. Many of those are technology. So tomorrow alone, we have companies scheduled to raise $2 billion and $1 billion. So we think we're getting more than our fair share of the large listings. I think when you think about technology, you do think about NASDAQ. And we love our brand positioning, but more so our value proposition to attract listings with an 80% win rate. And again, in the large market, we're really doing exceptionally well, especially this year.
Nelson, it's Morgan. I'm just curious, the actual logistics to pull this off today.
Yeah.
What was involved and what were the lessons learned?
Great question. So when you think about the direct listing versus a traditional listing, a lot of the processes are fairly similar. But what we had to think about along with the advisors is, as you saw, the continuing rise last few quarters of crypto interest, showing a lot of retail interest. What we were prepared for today was an exceptionally high participation by retail. The complexity is not sometimes around when you hear the the volume number. It's more the number of orders we're going to see. So that was a lot of our preparation, again, working with the advisors, understanding what configuration.
Watching Power Lunch. Frank, it was great to be on with you.
Always great to be on with you, Morgan. And I would friend you, by the way.
Oh, instead of block. Okay. All right, closing bell starts right now.
Thank you, Morgan and Frank, and welcome everyone to Closing Bell. I'm Sarah Eisen along with Wilfred Frost. Another mixed session on Wall Street on a jam-packed news day. The Dow setting a record high, small caps are rallying, but the NASDAQ and the S&P 500 are in the red. Bitcoin is at a record, and Dogecoin all the way up to 14 cents. Let's look at what's driving the action. It's all about the base. Crypto trading platform Coinbase finally making its highly anticipated Wall Street debut, and the whole crypto market is getting a lift. Bitcoin setting a fresh high around $65,000. The Federal Reserve just releasing its beige book in the last hour, saying the economy accelerated at a moderate pace, with a pickup in spending, in travel and leisure, adding that prices and wage growth accelerated slightly. And earnings season officially underway. JP Morgan, Goldman Sachs, Wells Fargo, all out with strong results. Wilfred's all over it, giving a lift to the whole financial sector. 59 minutes left to go in the session, with the energy sector currently in the lead. Wilfred.
Yeah, but off its highs. Ahead on today's show, two can't-miss interviews on Coinbase and the future of the crypto market. We'll speak with the Coinbase co-founder and board member, Fred Ursum, about the journey to the public market, the potential risks facing the company. A great day for him, of course. Plus, another great day for early investor Rashawn Williams from Manhattan Venture Partners. He will join us to weigh in on the valuation and the company's future growth opportunities from here. We're looking forward to both of those interviews. And Wells Fargo are moving higher today on the back of earnings. The best performing of the big banks. Will speak to the company's CFO in a first on CNBC interview. That's just about 5 or 10 minutes away. Let's focus in on the big stories, though. First of all, that we're watching today. Mike Santoli's tracking the market action. And I've got a closer look at the key takeaways from banks' earnings. I'm not sure I should be teasing my own hit, but anyway, Mike, we'll get to you first.
All right. Well, yeah, I mean, a little softening up in the indexes in terms of the S&P, but really it's still the same story in terms of this felicitous rotation among big versus small, cyclical against growth on a day-to-day basis. Today, it's small caps, it's a broader list of stocks doing better, and it's cyclicals that are bounced after a few days when you had the opposite. So you have a 6-month chart of the S&P 500 up more than 18%. I look at a 6-month chart because I want to compare it to another one, but we did have this little bit of a tilt higher after we broke out. Month to date, it really has been an upward grind since the second trading day of April. But we did hit 4150 today intraday as a high, and then we sort of backed off right after that Coinbase listing, actually about 125. This is from back at 2017 into 2018. I wanted to point it out because a lot of conditions are hearkening back to January of 2018 when we did have this culmination of a very long and calm rally. This increase right here, this 6 or 7 month increase, was likewise about 18+% as it has been in the last 6 months. The difference is, look at that huge spike, that real acceleration higher that we saw. This momentum built up a lot more. Also, we were coming out of a very low volatility environment right here. We are now arguably just entering a lower volatility range after a year of very excitable trading. So you don't want to draw direct parallels, but be mindful that a lot of things right now look like the S&P 500 as in particular might be getting ready to have a sort of a culmination moment with a lot of things going right for a long period of time in the very short term. Take a look at Coinbase, mentioned it. We did get that listing. It's trading lower from the opening price. Keep in mind, a direct listing, part of the point is to maximize the demand, to get a real clearing price at the open as opposed to price it low and hope for a pop or really restrict any of that kind of access to the initial shares. So you do have some heaviness. You do have insiders being able to trade. And you don't have underwriters out there stabilizing the price as you would with a traditional IPO. So trading well below that $100 billion aggressive valuation that we did have. Also, take a look at some of these other sort of risk appetite tells that we track sometimes. That's the IPO, ETF, also SPACs, as well as kind of the ARK funds. The IPOs and ARK have had this sort of similar trajectory down, and then a decent little bounce recently, but it still looks a little tentative. It looks a little halting. We talked about how retail traders have not been as aggressive a presence in the last several weeks or even more than a month right now. Maybe coming back, maybe getting a little interested now with the Coinbase and the run in Bitcoin to new highs, but it still remains to be seen if that's going to be a real driving force into the summer, guys.
Though not today. Tech's down, ARK Innovations down, consumer discretionary down. Mike, thank you. We'll see you soon. Mike Santoli. The financials are among the winners today as the big banks officially kick off earnings season. Wilfred has the big takeaways from JP Morgan, Goldman Sachs, and Wells Fargo, which did better than even raised expectations.
Yeah, indeed. Strong afternoon for those stocks. Let's start with Goldman Sachs. A monster quarter from them. Record revenues, record EPS. Revenue up 100% year over year and 50% quarter over quarter. Investment banking, global markets, and asset management all beat comfortably, and impressive operating leverage coming through as well. ROEs north of 30%. JP Morgan's capital markets activity also very strong indeed. Both Wells Fargo and JP Morgan's EPS was a big beat, but flattered because of a big benefit in the line for provisions for bad loans. JPM CEO Jamie Dimon saying, "We don't consider this core or recurring profit. However, it is, of course, better to have benefits, not provisions, and they are only possible because of a better economic outlook." So that is good news overall. Dimon saying he expects a very strong economy. With the recent rise in yields in mind, net interest income did disappoint a bit for JP Morgan and Wells Fargo, but Jamie Dimon explained this was for good reason, as loan growth was only soft because clients were able to pay down debt. Indeed, it was confidence on the Wells Fargo call that net interest income and loan growth would improve in the second half of the year that really started to drive Wells Fargo shares higher. They're up 5% or so. The Wells CFO, as we said, will join us shortly. Goldman Sachs CEO David Solomon did touch on the Archegos capital blow-up that occurred in the past quarter.
This is a case of an investor with highly concentrated and leveraged positions. This is not the first time we've seen a situation like this, and it likely won't be the last. We have robust risk management that governs the amount of financing we provide for these types of portfolios. Our risk controls, all of which were put in place long before the March events, worked well. We identified the risk early and took prompt action consistent with the terms of our contract with the client. I am pleased with how the firm handled it.
And I'll just say, as we sit here today compared to a couple of weeks ago, it might actually be possible that the Archegos issues ends up being a net benefit over time to the likes of Goldman Sachs and probably Morgan Stanley as well, if prime brokerage units close down in other places in Europe and so forth, and they end up gaining market share because of it without having taken on the big losses that some of their European and Asian rivals took on. And Sarah, I just think it's a bit of a snapshot that we saw in the Goldman numbers and the JPM numbers in capital markets. Maybe we'll see for the others over the next couple of days that universal banking is working for the big US banks, not so much for European banks, and not necessarily so much for smaller US banks, and those capital markets numbers for Goldman in particular, but JP Morgan too, just unbelievable today.
Investment banking fees soaring for JP Morgan. Wilfred, just wanted to ask about one of the weaker spots, which is loan growth, right? We knew going in deposits would surge and loans not so much. Any guidance on that? Any outlook of loans picking up as stimulus fades a little?
Yeah, well, that was an important part of the Wells Fargo call, which drove the shares higher, and we'll be able to talk about that with Mike, the CFO, in just a few moments. I think the key point is that the explanation for why loan growth was weak in this past quarter was a good one. It's not because we're about to head into recession. Jamie Dimon in particular said, look, if it's because a new COVID variant is spiking up and that's what's hurting loan growth and that's what's hurting net interest income, then that's a bad thing. But if it's just because there's so much liquidity and both consumers and companies are raising capital with ease in the public markets, then they can pay down their debt. Yeah, they don't need to take on further loans. And that was his sort of positive spin on that, and said it'll come out in the next quarter or the next half of the year. And the guidance on that from Wells Fargo a bit clearer than it was perhaps specifically on JP Morgan, and Wells Fargo is up 5%.
Dow's up 66 points, financials outperforming. We're going to talk much more about the banks and the recovery in America when we are joined on the other side of the break. First on CNBC by the CFO of Wells Fargo, which, as Wilfred said, is up 5% as we head into the close. You're watching Closing Bell here on CNBC.
Market is unpredictable.
All right, let's take a look at some ticker symbols. We're having some uptick here on the VIX. We're seeing a sell-off. VIX is currently at 17.6. Let's look at the VIX. VIX going up here, 17.459. If we look at the indices, it looks like we're ready for another sell-off. Look at Q's, big down move, big red candle here, down 1.36% currently. It's at 335.92, and my moving average here is at 332. So we're seeing a sell-off here. We're seeing a reversal. Could this be the beginning of a sell-off going back to these lows of this aggressive, V shape rally here? I don't know. Well, this is more like a U shape, a V shape from this pullback. This was super aggressive in a course of 2 weeks. So now we're seeing some heavy selling. We can see some support here around the 330 mark. So it could just be intraday kind of a move here. Let's see what the SPY is doing here. SPY, let's look at the daily here. That is not the SPY. SPY here also beginning to sell off. So right now on my trading account, I actually sold some call credit spreads here. So it's bearish on IWM. So I have a lot of bullish positions. So just a little hedge. I went with the May 21st a call credit spread here. So I went 521 here. So I sold the 23s and bought the 24s. So we'll see how that pans out. It's just a little small hedge, nothing too big. But I sold some call credit spreads right now on the IWM. This could be potential for a reversal. Let's see what Tesla is doing. Tesla was on a complete rip. Here we go. We're seeing Tesla selling out as well. 735. So this rally could be short-lived. We're going to have to wait and see. Maybe it's just taking a breather for a day or two. Some profit taking before we go higher. Now, I'm guaranteed Coinbase is down right now. Guaranteed. Guaranteed it's at 300. I haven't looked at it. 324. So, wow. It hit 310. Look at that. Look at that. I think it holds 300, but I could be wrong here. But yeah, Coinbase, crypto is all-time highs. Markets are all-time highs. So it looks like, we're due for a pullback. If we look at the tape here at Coin, we see a lot of green. So this could be a short-term bear squeeze here for Coinbase. It held at 310. I don't think we go below 300. I would be surprised if we do. I don't even think we go below 300 this week. I think Coinbase is going to found its base here at 300.
Wells Fargo CFO Michael Santomassimo joins us now in a First on CNBC interview. Good to see you, Michael. Thanks for joining us.
Hey, Wilfred. Thanks for having me. Appreciate you making the time.
Well, it's really the other way around on a busy day for you. But let's start, if we may, on the macro outlook. It was really interesting to hear some of the comments you and Charlie were making about the outlook for the consumer based on some very, very short-term data, even since the end of the quarter. I don't know if you could just expand on that, the scale of pickup we've seen in consumer spending and what it makes you think for the rest of the year.
Well, I think it's clear that the consumer's in really good shape. And, both from a liquidity perspective, they have more cash than they did, even pre-pandemic in a lot of cases. And you're starting to see activity levels pick up as the vaccine rollout and the economy and states start to open back up. So while it's still really early, I think, in that recovery, I think you're starting to see some really good signs, which should set up more activity for the second half of the year.
The shares kind of picked up during the call when you were able to kind of keep guidance where it was or tighten the range, as it were, particularly for NII and loan growth linked into that. What gives you confidence that the second half of the year or the next 3 quarters will allow you to kind of make up that initial guidance?
Yeah, well, let's start with the quarter, because underneath that, there are 3 or 4 things sort of happening that I think help, maybe with the story. First is, we are seeing economic trends improve, and we're seeing that come through a number of fee lines in our business, in the home lending business, the investment banking business, the asset-based fees in our wealth business, all up, solid double digits year on year. You're seeing credit performance be really good, both on the consumer and the corporate side or the commercial side, which I think that's in part due to forbearance, in part due to a lot of the stimulus that's been injected. Offsetting that's been the NII, the impact on NII from lower rates, which you were sort of getting at there. But overall, we feel really good about where we stand in terms of capital, liquidity, and sort of how that positions us, for the future. As you sort of think about the second half of the year, the trends are improving, and the likelihood that we're going to see a robust economy in the second half seems to be increasing. And as you look at, whether it's the consumer, as we just talked about, you look at, the overall sort of job creation that's starting to happen, all that should set the second half up to be pretty robust from an economic perspective. And with that should come some more demand for loans, particularly on the commercial side. So we're hopeful that that comes as the recovery starts to gain momentum.
Do you worry at all, Michael, about the state of the consumer and business when the stimulus wears off? Is it artificially inflated to you? And could we see defaults and bigger problems, say, into next year when that wears off?
Well, I think it's clear that the stimulus is really provided a bridge as you sort of get through this pandemic. And for most people, as you sort of look at the folks that have come out of these forbearance programs, something like 95% of them are actually performing and up current on their loans. So in most cases, the stimulus has provided an effective bridge to get people through that. But it is still early, and I'm sure as we sort of get through the second half of the year, we'll see folks that probably would have had problems anyway pre-pandemic start to come out of the forbearance programs. But it's a really small percentage of the overall number of consumers that were part of those programs from the beginning.
With the asset cap, Mike, I mean, you're kind of up against the ceiling of it. How hard is it making your job to service clients with that in mind? And any update on when it might be lifted?
Yeah, as it relates to the work we're doing, we're very much focused on just executing the work we've got to get done to build out the risk management, infrastructure. We think we're making progress, but there's a lot of work to get done, and we're very much focused on it. We've had to make some tough decisions over the last year as we sort of work through the pandemic, and we're continuing to do that as we sort of look forward to make sure that we can be there for our clients. And really the constraint for us is deposit levels and how much deposits we can bring on our balance sheet. We've got plenty of capacity that continue to support both consumers and our commercial and corporate clients from a credit perspective or a loan perspective.
2021 event that it gets lifted?
We're focused on getting the work done, Wilfred, and when we do that, the Fed will make their own determination on that.
And just finally, I'd say, Mike, this quarter is probably the first in quite a long time where after the quarter numbers and the earnings call, we're not seeing analysts have to lower their estimates in one area or another. Clearly, the share price reaction today is reflecting that. Do you feel like the bottom is in? It's up from here?
Yeah, look, I think if the base case plays out that we sort of talked about, where rates continue to stay about where they are, and you start to see that loan growth pick up in the second half of the year, then it's likely we're either at or near at least the bottom for NII. But I think there's probably a little more time to play out before we call it for sure. But I think we're likely close to it if we start to see that loan growth pick up in the second half of the year and rates stay where they are.
Thanks so much for joining us. Much appreciated.
Thanks for having me.
Tomorrow, by the way, Bank of America will be a part of another big day of earnings. And Brian Moynihan, the chairman and chief executive, will join us first on CNBC at 3 p.m. Eastern time. You don't want to miss that one. Still ahead, Coinbase jumping from its reference price in its first day of trading, though currently well below its opening price. We'll discuss the company's rapid rise and its journey to the public market with co-founder and board member Fred Ursum. As we head to break, check out some of today's top search tickers on, yes, it's not the 10-year for the first time in ages. Coinbase tops the list, then the 10-year. We're back in a couple minutes.
Interactive Brokers charges 1.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab, to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
If you're looking for a different type of financial partner, discover Baird. Our culture is founded on integrity, transparency, and teamwork to give you the financial advice you need now and for the next 100 years. Discover the Baird difference. Visit BairdDifference.com.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means...
Okay, so sure enough, I called it. I said we're going to break 350. We're going to go straight down to 300. We hit 310. I was close. And I do think we hold 300 here. I don't think we go below 300 for the rest of the day. We have about 40 minutes left on the before the close. I would be extremely surprised if we close below 300. I don't think that's very likely. I mean, they're not going to make it cheap. Even though there's a lot of hype and they're squeezing all the bulls who bought at the top, they're not going to let you buy below 300. So I don't think that's very likely. Now, what's going to be the future for Coinbase in the short term? I don't know. It looks very likely like it's going to hold around $300 in my opinion. We also saw, I think we're going to see a little breather here on the major cryptocurrencies. We have Bitcoin selling off here. And they're pretty hot. They win all-time highs, and it could just be a short-term pullback. So I do see Bitcoin coming back down to around 60,000, 58,000 in the next few days, and can cool off for about a week or so. If we take a simple measured move here, let me take the pencil here, trend line. This is a measured move here. If we drop from here to here, let me see if I can grab that. Let me see here. Magnet mode. If we take that from here to here, and we draw this from here to here, we take this high. Actually need to go a little bit lower here. About here. And we take it here to here. We see a pullback here that will last up until the 23rd, more or less here. So that's what I anticipate for cryptos to do in the short term.
Willfully violated the law. Air Force veteran Ashley Babbitt was trying to climb through a broken door at the Capitol when she was fatally shot. The Coast Guard is still looking for a dozen people who were aboard this commercial vessel when it capsized in winds over 80 miles an hour. It happened off the coast of Louisiana. 6 others have been rescued and 1 crew member was found dead. And the Treasury Department has set up a new office to oversee COVID relief programs. The Office of Recovery Programs will send out roughly $420 billion in aid that was approved as part of the American Rescue Plan and see how people are spending the money they've received and how much is not going to basics like food and rent. Tonight on the News with Shepard Smith. You're now up to date. Sarah, I'll send it back to you.
Rahel, thank you. Back in 2015, when Bitcoin was trading around $270 or so, we spoke with Fred Ehrsam, the co-founder of Coinbase, which had just launched a U.S.-based Bitcoin exchange. Listen to this.
You're former Goldman Sachs foreign exchange trader?
That's right. Actually, when I was at Goldman, I would sneak into the bathroom occasionally to trade Bitcoin on sites that I think weren't particularly reliable. So really excited to launch a proper exchange in the U.S. today.
Fast forward 6 years, things have certainly changed. Up next, Fred Ehrsam returns with his thoughts on going public as Bitcoin hits a record high. And as we had to break, check out the bond trade right now. Yields are moving slightly higher, 10-year yielding around 163%. Fed Chair Jay Powell speaking at an event earlier saying the taper will likely come before the move higher in interest rates. We'll be right back.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Wealth is your first...
So we have Coinbase here holding up pretty strongly, going back up to 339. We look at the time and sales here. We see a lot of green with sporadic red, so this is very bullish. Buyers outpowering the sellers. We look at the order book. We see here at 340 block here of sales. So we're at 340 now. Oh, it just went through. So there we go. We're at 342 now. So we just broke that block at 340 in the short term here on the order book. Time and sales reflecting more green. So definitely bullish. Probably going to go back up.
Commitment to better ESG outcomes. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
Did you know that Petco is now a health and wellness company?
Their groomers work wonders for my confidence.
I trust their vets, and I'm known to have trust issues.
They deliver high-quality food the same day.
I was outside digging. What'd I miss?
Just everything regarding our physical, social, and mental health.
Exciting.
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving. Until they came to us. Keck Medicine of USC. Beyond exceptional medicine.
Sound of Metal is nominated for 6 Academy Awards,
Your hearing is deteriorating rapid.
including Best Actor Riz Ahmed,
You're my part. You gotta wait for me.
Best Supporting Actor Paul Raci,
We're looking for a solution to this, not this.
Best Sound, and Best Picture of the Year. Sound of Metal, for your consideration. Rated R.
Download Thumbtack. It's the app that finds you local pros for any home project, like people to fix the plumbing, or freshen up old paint, or help you deal with all those boxes. Thumbtack instantly finds local pros for you. It shows you prices and reviews so you can hire exactly who you need. Download the app and start your next project today. Thumbtack.
Story of the day, Coinbase making its trading debut earlier today with the stock opening at $381 per share compared to its $250 reference price. The stock still trading above that reference price, but has lost a little bit of steam, down about 10% or so from the open. Joining us for more in a first on CNBC interview is Coinbase co-founder Fred Ursum. Fred, it's great to have you back on the show. Co-founder, major shareholder, board member. What's today been like for you?
Today has been a huge culmination for, I think, the crypto community and what everybody's been building towards for over 10 years. I think Coinbase is the most publicly visible thing that's in the ecosystem today. And then I think what people will begin to wake up to, perhaps starting with this direct listing, is how big the crypto ecosystem is and how much it is likely to grow over the coming decade.
How big is it, and how much is it likely to grow? Because I remember Brian Armstrong, your early partner, saying it could be worth $1 trillion. Well, now it's a $2 trillion market and growing.
Right. It's one of these things where when we talked about it early, it seemed insane. To give perspective, when we founded Coinbase in 2012, one Bitcoin was worth $6. All Bitcoin was worth about $50 million in total, and Bitcoin was the only thing that existed in cryptocurrency. Fast forward 10 years to 2021. As you said, crypto assets are cumulatively worth over $2 trillion. There are many of them. It's not just Bitcoin. And not only are we looking at the potential future of money, but also of the financial system and a new internet application platform.
With that in mind, I was wondering what you thought over the next, let's say, decade, maybe 5 years to a decade. Do you think the share price of your company will be tightly correlated to the performance of the underlying assets, Bitcoin in particular, or might they be even negatively correlated?
Well, I think what we've seen in crypto over the last 5 years is there is more of a diaspora. There's just a lot more going on. So I think if Coinbase does its job and executes well, it will continue on its mission to make crypto easy to use, and there will just be a whole lot more to use in crypto. When we started the company, it was just investing, the idea of Bitcoin as digital gold. And if you look at the ecosystem today, it goes way beyond that. People are doing trading and lending directly on the blockchain, for example. And of course, there's the NFT phenomenon that's revolutionizing modern media. So I think it will be less correlated to any singular crypto asset. Of course, it will be correlated to the success of crypto overall. And that's something that I would be very happy to have exposure to.
That's sort of what I was wondering, which is where Coinbase goes from here. We've seen the trading story and the juicy margins and the profitability and the money you make on trading. But you've said that beyond that, it's an on-ramp to crypto. What exactly does that mean? Where does this business go?
Well, so it's sort of inherently hard to predict what the future of crypto looks like, much like the internet was hard to predict when it went mainstream as crypto is now in the late 90s. I think the high-level way to think about it is as crypto grows, there's going to be a whole lot more that happens in the crypto universe. And that's hard to see today, but in 10 years, I think it will be very big. And if Coinbase does its job right, that means it's not just the easiest way to one-click buy some crypto from your bank account. It's also the easiest way to use all these crypto-native financial services and future internet applications.
Where do you stand, Fred, on how many different cryptocurrencies can really achieve critical mass and be around for the long term in 10 years' time? Is it unlimited, provided people get them out there and market them well, or will we just be talking of 2 or 3 of them in 10 years' time?
I think what we'll see is a vibrant ecosystem of crypto assets. Specifically, the idea of cryptocurrency as money or as a pure store of value, that might be confined to a small few, and there may be a few winners there. Obviously, things like Bitcoin and Ethereum are very large in that category today. But what we have seen over the last 3 years are a whole series of other assets emerge with real utility value. If you look at what's happened in DeFi or decentralized finance, as well as people even minting their songs or their artwork on top of crypto. Those are new crypto native assets. And while they might not look like money, I think there will be whole categories of crypto native assets that look like that that could be quite big.
Fred, a lot's gone right for crypto lately, for Coinbase and Bitcoin, but Bitcoin is trading off the highs. It's back down to 61,000. Your stock also off the highs. Tesla, Square, a lot of the Bitcoin exposed companies are trading off as well. We've seen the rise of NFTs and just this explosion of hype. Some are wondering if this is the top.
As somebody who's been working in crypto for 10 years, I've heard that statement hundreds, if not thousands of times. This is the 4th crypto cycle. It started in 2011 when I was trading out of my apartment in New York working at Goldman. Crypto went from $32 to $2, or specifically Bitcoin, in the course of 3 hours. It happened again in 2013. It happened again in 2017, and now it's happening again. I think the reality is that if crypto is to achieve the huge mission that I think it can, which is being a new global digital money financial system and internet app platform, there is bound to be a lot of volatility along the way. It's certainly not for the faint of heart in the early days, and that was a huge challenge in building Coinbase and staying the course. So I think it will be volatile from here, but that's just the nature of such a huge technology coming into existence, and I don't think it could happen any other way.
One of the big risks has always been regulation. It's something we talked about, Fred, back in that interview in 2015 on Bitcoin, but it still looms large. The new SEC commissioner just got voted in today, and we know that Gary Gensler is maybe a friend of crypto, or at least understands the crypto community, but everyone wants to pounce here. Central banks, the CFTC. What specifically would you welcome from regulators, and what could actually materially damage your business and the price of Bitcoin in terms of regulation?
The thing that's been extremely challenging over time with regulation of any new technology is it's very hard to predict where it's going. So as a regulator, you're in this very tough spot. You sort of have to think, I should put in place some safeguards now, but if I do, those might have unintended consequences that I didn't fully predict. The thing I would look for is governments around the world, potentially even the political leaders outside of regulators, waking up to the fact, as we've started to see in the United States, that this is an internet-size opportunity for every country. And one can imagine what the United States economy might look like if we didn't lean into the internet as we did with high-level declarations from the White House in the late 90s.
and how different the United States would look today. So that's really what I'm looking for. I think crypto as the next internet-sized opportunity will become a part of public discourse outside of regulation and help all countries make good risk-reward decisions around it.
Fred Ursum, congratulations. Big day for you as one of the largest individual shareholders and founder and board member of this company. Thank you for joining us today.
Thank you, guys.
Still to come, curb your enthusiasm, why Bank of America Securities' Savita Subramanian is telling investors to manage expectations for the S&P. She'll join us next.
Sales are down from last
All
quarter.
right, let's take a look at some of the broader markets, just see overall what things are doing here. Let's take a look at the SPAC ETF. This is SPCX. Oh, nice. Making a little move here. Nothing major, but a little green here. It's up, what, 0.03%? But I thought it was going lower earlier. Volume levels on the dailies look terrible. It looks like the volume has been sucked out of the market. We're not seeing a lot of activity or action. So pretty dead, pretty dead. Volume's very low here. So let's look at IPOE, SoFi. Trading at 1659. Volumes extremely low. Dead, dead, dead. So this is a type of market I like to sell some contracts here. You can do some iron condors, or you can do some call debit spread, call credit spreads, or put credit spreads. Either way, I mean, at these levels, the way it's trading, and if you do options by the traditional metric of buying about 45 days out, 30 to 45 days out, it's selling at the money or close to at the money, or you can go slightly off the money and lock it in at 50%. You will make some money. It's the way the markets. You can go long or you can go short, selling some spreads, and if you do 50% profit in 45 days, you'll probably make money either side. It's just completely sideways. So this is definitely an option seller's market. As far as we go with the low caps and the SPAC kind of stocks, let's look at PSTH. PSTH at 24.52 holding here. Easily do some put credit spreads, 45 days out, piece of cake, make 50%. Easily. If it doesn't work out, roll it out. It'll work out. Roll it out for another 45 days. Make sure you get that money. Piece of cake. So the only thing with selling is, the optimal time for selling is 30 to 45 days, and you do have to wait unless there's a big move and you can cash them out early. But, time is on your side and you want time to, go on. Let's look at PaySafe to see what it's doing here. PaySafe had a nice rally right before the Coinbase IPO. Now it's at 1379. Big wick here. This is bearish. And we're going to have to wait and see what it does.
As earnings season kicks off this week, Bank of America Securities raising its full-year S&P EPS forecast by $20 to $185. That's up 32% year over year. But the firm telling investors to curb your enthusiasm as the S&P year-end price target remains unchanged at 38,000. Of course, as we stand, we're at 4,125. Joining us now to explain why, Bank of America Securities Head of U.S. Equity and Quantitative Strategy, Savita Subramanian. Savita, good to see you. Thanks so much for joining us.
Nice to see you.
So you've
Thanks
got
for having me.
a number of reasons why you're kind of cautious on that year-end return for the S&P 500 from here. The first of which grabs my attention most of all is just sell-side indicators. Talk us through that.
So the sell-side indicator is a sentiment indicator we've been tracking for decades here at Bank of America. And it's basically just looking at what Wall Street strategists are telling you to allocate to equities in your overall portfolio. And what we found is that this is, if you take the average of all of these allocation recommendations, this ends up being a very contrary indicator of what you should actually do with your money. So historically, what we found is that when there's lots of good news swirling around and everybody's really bullish and it looks like stocks are going to go up forever, and allocations grow very extended, those are better times to sell because chances are all of that good news has been priced into the market. And today we are at similar levels of very stretched allocations to stocks. In fact, we're just 1 percentage point away from a sell signal from this model. And I think what this underscores is the fact that there's not a lot of reasons that doesn't feel like there's a lot of reasons to worry today. The economy looks great. We've got this recovery in profits. We've got IPOs of esoteric instruments. It just feels like a good, great environment. Stocks have been going up pretty nicely for the last 12 months. In fact, we've seen record levels of returns over the last 12 months, and I think what that tells us is that the market is more likely to disappoint in the opposite direction of where everybody is really thinking it's going. So that's one warning sign to us that things are looking pretty toppy.
So Savita, what do you do then in that environment?
Yes. So what do you do? So there's always something to buy, and our view is that while the S&P 500 might be pricing in a lot of the good news, there are pockets of the market that are definitely still trading at relative discounts. And I would stick with cyclicals. I would look for CapEx beneficiaries, since we're hearing a lot more about potential infrastructure, potential CapEx boom, areas like industrials, even financials, which have worked reasonably well over the last few quarters, but there's still a lot more upside, we think, in terms of relative gains. I think what's interesting is that despite the fact that this year looks very different from last year in terms of, reopening the economy, we have a new administration, we could potentially see tax rates go higher rather than the cuts we saw a few years ago. Investors are still very similarly positioned to this growth and tech bias that they've had for multiple years. And I think that is slowly being shaken out by this value rotation. I would stick with value. I would stick with cyclicals. I would stick with industrials, financials, even energy. I think there's more to go. Small caps, I think there's more to go. People look at this violent rotation as though it's been a really long time that value has been outperforming growth, but actually it's only been a couple of quarters. So we really need to think about it within the context of a big recovery, potentially a big move on the cyclical recovery frontier, and really look for pockets that are undervalued today. And we're still finding a lot of them.
Well, it's a trade that's working today for sure. Russell 2000 up 1%, S&P lower. Savita Subramanian, thank you very much for a quick hit on your note today. We appreciate it. Coinbase wrapping up its first day of trading as a public company. We'll look at how it performed and what it says about the market next in the
It's called Follow the Smart Money, and traders are lining up here to meet the authors John and Pete Najarian and get a free copy.
The smart money on Wall Street belongs to the big boys. They're the ones with the resources and technology to know before any of us when a stock is going to move.
By following their trades the way we do, you gain their advantage and get in first, ahead of the herd on the smartest trades.
You see John and Pete Najarian on TV. Whether you trade stocks or options, this is how they pick their trades. And you don't have to be here to get your free copy. Call or go to followthesmartmoney.com right now. Just take care of delivery and it's yours free. Act quickly and you'll also get this companion DVD for free.
Call 800-850-3232.
This is the world's quietest auto insurance commercial. Because most of those commercials are like loud. So Walwanisa wanted to quietly tell you about their J.D. Power Award. Not only do they have great rates for good drivers, but they're ranked #1 in customer satisfaction among auto insurers in California. Shh. Walwanisa, the best kept secret in auto insurance.
It's more than a vibe or a style. It's a community, a family.
All right, I'm looking at JP Morgan. It looks like they're having earnings here. Might have them after the bell. It's set up nicely here. I feel like doing some put credit spreads here. It's trading at 151. I feel like buying some put credit spreads for May 21st. Banks holding nicely here. Had a nice rally. Cooling off now. more of a cyclical stock. JP Morgan is a strong stock. So I just want to bring out to your attention. Let's look at some CCIV here before the close. We're 45 minutes out. Look at the 5-minute chart. Complete dead action here. Volume totally sucks. And nothing really going on here. We're at 21.77. And we're about 15 minutes away from the close. So really contemplating this JP Morgan. Let's see what else do we have here. Mike, I'm reading from Mike. Coin is taking everyone's attention and money. Everything else is floating along. Yeah, I think Kramer tweeted something where like people are selling off their positions to buy coin. Like there's not enough money in the markets right now. It looks like there was a vacuum of money coming out of the markets. Volume sucks right now. A lot of the high growth stocks and lower cap stocks and SPACs got decimated. So yeah, a lot of people lost a lot of money in the past few weeks, and people selling off other stocks to buy some coin to play, the latest hype stock here for potential gains. And coin is holding here at 331. I don't think we'll see coin in the short term go below 300. And yeah, when it broke here, the bottoms of the open, right away it went to 350, and I saw it going to 300. And I don't think it goes below 300. And sure enough, it's holding here.
Steve Leisman's got it. Steve?
Sarah, Vice Chairman Rich Clarida providing a 1-2 punch of dovishness from the Fed following comments from Fed Chair Powell today. Clarida will say appropriate monetary policy will remain accommodative for some time after the conditions to raise rates or normalize policy has already begun. That's a future promise of even more dovishness than I think we'd seen in the past. Policy, Clarida says, will not tighten solely because the unemployment rate has fallen below any particular estimate of its long-run natural rate. This speech, as you might imagine, is a bit of an academic speech, but has some understandable, at least, notions for investors out there. He defines maximum employment as the highest level of employment that does not generate sustained pressures that put the price stability mandate at risk. So again, this follows comments from Fed Chair Powell this afternoon, who said raising rates is unlikely before 2022, that raising rates is outcome-based and won't happen before the labor market recovery is essentially achieved. All of that followed a beige book, or that came after a beige book that had a few whiffs of inflation but was very bullish. Wilf? Sarah?
Steve, thanks so much for that. Very interesting extra insight. Similar theme overall, of course, of late. Oil still up nicely. Dollar down 0.2%. We now have, 13 minutes left of the trading day. We're now in the closing bell market zone. Commercial-free coverage of all of the action going into the close. CNBC's senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And we've got Ritholtz Wealth Management CEO Josh Brown with us as well. Good afternoon to you, Josh. Suit and tie this week. Very nice. Let's kick things off with the broader market. Stocks off session highs. The Dow and S&P 500 hit intraday record highs earlier in the session. And Mike, a couple of sort of big gut checks, 2 p.m., 2:45 p.m., but ultimately this final couple of hours of trade a bit softer.
Yeah, it felt big in the context of a market that's really been, kind of in a sleepy way, just walking higher. I would say it's the inverse of what we've seen recently. The Russell 2000 is up more than 1%, whereas the S&P is struggling. Past few days, it's been kind of the reverse. S&P been looking good because of the mega cap stock. This has been this harmonious kind of back and forth we've been enjoying for a while. Obviously, it'll reach some extent. It can't last forever, but it's been tough to over-anticipate when this stuff has finally reached, this sort of maximum level on this particular phase of the rally.
I think we have to talk about commodities, Josh. Oil prices up 4.5%. Energy is the best performing sector. Materials are up there as well. Lumber prices at a new record high. Do you stick with the commodity-based exposure in the stock market as the inflation theme heats up?
Yeah, so it seems like the Dow is the new NASDAQ, and the Dow has more exposure to that stuff than the NASDAQ does. S&P is flat, but a new all-time high for the Dow today. Very interesting that the potentially negative news for the reopen via J&J didn't really seem to have any impact on these stocks. Capital One still looks outstanding. AA, super strong stock. Deere looks great. Freeport-McMoran is your best performing S&P 500 name. That's very interesting. And then to your point, energy. Got a little bit of a sell-off in tech, but the money's going somewhere. And it's going into this continued cyclical trade. So, yeah, I think we got to keep these trades on our radar, on our screen, even though if we're not directly engaged in them, because I think they are a good gauge for sentiment around the real economy performing this year and outperforming, frankly, a lot of big cap tech. So that trade was not knocked off.
The other big one on the screen all day, Coinbase, the direct listing, a huge milestone for the crypto economy. Kate Rooney with the details. Kate.
Hey, Sarah, Coinbase, the largest U.S. crypto exchange, is now a publicly traded company after years of skepticism on Wall Street. Today's listing is really seen as a legitimizing moment for that industry. Coinbase helped take Bitcoin from an internet hobby for coders to a mainstream asset by letting everyday investors trade it. Coinbase's $100 billion valuation this morning implies that it could grow beyond its brokerage business, despite still making the majority of its revenue on trading fees. There's plenty of skepticism out there on Coinbase, but the bulls are focused on the next phase of crypto, which includes moving more of the traditional financial system onto blockchain. Back to you guys.
Kate Rooney. Kate, thank you. Exciting day, Josh. Are you a buyer of Coinbase, and do you think it's having an impact on the overall market?
I'm not. I'm a customer at Coinbase. I think it's an outstanding company. I think Brian Armstrong has absolutely been a visionary. I think they've done pretty much everything that you can do right. But I think a lot of the money's been made in the pre-IPO market, which has been the case with a lot of very fantastic stories like Snowflake. So as much as I'd love to be an investor here, I'm not that big of a muppet, right? My first summer in this industry, I was actually still in college, cold calling for a bucket shop on 3rd Avenue, and we were pitching the E-Trade IPO. Like, that was what everyone was all excited about. And the parallels here should not be missed. Coinbase actually is coming public further along than E-Trade was. E-Trade was only handling 8,000 trades a week with less than 1 million customers when they came public in 96. But then they spent their entire life as a publicly traded company up until their acquisition by Morgan Stanley last year, fighting on the losing side for the most part, a fee war. And keep in mind, in 96, they were getting $20 a trade, and that eventually went to zero. So the question is, we know that Coinbase can't continue to garner the fees that they currently are for trading crypto. There's no way Fidelity is just going to sit there with their hands folded. There's no way you won't have a lot more serious and substantial competition as this asset class comes of age. But the question is, will that even matter? Can volumes be so much bigger that they can withstand that average fee that they're getting every time somebody buys and sells? Maybe they can, but I think the valuation is pricing it in as though it's a fait accompli. Like, they definitely can. And I don't know that I believe that. So I'm not in it. It's not a knock on the company. I think it's an amazing company. I just wish it were 230 rather than 330.
Coinbase currently 325, having opened at 381. More discussion on that after the close. Meantime, shares of Wells Fargo rallying on the back of an earnings beat. Earlier this hour, we spoke with the CFO, Michael Santomassimo. His outlook for the second half of the year.
Whether it's the consumer, as we just talked about, you look at the overall sort of job creation that's starting to happen, all that should set the second half up to be pretty robust from an economic perspective. And with that should come some more demand for loans, particularly on the commercial side. So we're hopeful that comes as the recovery starts to gain momentum.
Mike, the intraday chart there really told the story, which it was down after the numbers, and you started to ask the question of why is Wells Fargo still behind its peers when it reports these numbers? The earnings call was a totally different tone from the last, frankly, couple of years worth, not just a couple of quarters worth. It did feel like they're turning a corner.
Right. And I think you have, in addition to just the macro story, which the CFO detailed right there and applies to other banks as well, just an operational improvement theme that's running through Wells Fargo as well. So that is why a little more of the catch up and a little certainly the outperformance relative to the reaction to JP Morgan, which is always just considered to already kind of have its act together for years. And it's really just riding the larger trend. So I think it certainly makes sense, but also the give and take within the earnings reactions to the different banks is probably going to be a theme that we see for most industries, I think, this earnings season.
Tech, for the most part, under pressure. Some news, Instagram and Facebook could be getting rid of likes. Let's get to Julia Borston for more. Julia.
Well, Sarah, you might have that option. Instagram is experimenting with giving its users the option of not seeing the like counts on their posts. They are saying this is to, quote, understand if it lessens some pressure when posting to Instagram. Facebook says it's working on giving its users similar controls over their experience on Facebook. Now, the idea is that if getting likes isn't anxiety-inducing, then users might want to post more. Meanwhile, Facebook shares losing about 2% today. Wedbush warning of privacy risks to the platform, initiating coverage of the stock with a neutral rating and a $340 price target. Back over to you.
All right, about $38 of upside there. Julia, thank you. Josh, hiding the likes, good idea. You're a social media maven, at least on Instagram these days. I like a lot of your stuff.
I appreciate it, and I like a lot of your stuff, Sarah. I think this is a distraction. First of all, nobody's posting anything without likes because what's the point? You don't get the endorphins. So why are you posting? Just to piss people off? Like the trade-off was, all right, I know this is going to annoy my friends, but I want some likes today. So now if you get rid of that or you make it voluntary, I can't imagine that doing anything. The real issue here is if they have 100 ways to micro-target someone for an advertiser and they lose 20 of those ways, does the value of the platform decline? And that's what's being discussed right now. And the stuff going on with Apple is the real story, and everything else I feel like is just press release.
Mike, you're of course a machine when it comes to Instagram and Facebook.
Oh, yeah. But I've yet to post once.
Well, but you're on Twitter. There we go. Yeah. You more charts than photographs. But anyway, but the share price had a good run over the last month or so.
A great run, absolutely. I mean, I think you were able to say it was really kind of exhibit A in the idea that some of the FANG stocks had been sort of cheapened and left behind a few months ago. It has had this great climb to an all-time high. Now, the valuation is not at an all-time high. I think you could still look at it and say that along with Alphabet, it actually looks relatively modestly valued. So it's not so much a story on that. It's just about what types of stock are going to lead this market or are going to really be the performers right now. And it has had this little bit of a burst and probably time for a rest. But I think it sort of fits in with this mode of it's not really reopening, but it's also this stable grower that you're not really going to necessarily have to worry about the path of the fundamentals for a while.
Josh, you keep making the point that you like that there's rotation. You like that when tech is under pressure, energy and materials and industrials pick it up and the index moves higher. But what do you do with the FANG names, which have been a little bit under pressure? They've come back off recent lows, but there's still questions.
I have to be honest with you.
I have to be honest with you.
Yeah. I've been lost in that whole narrative because I look at charts more than I read opinions. And when you look at charts of large cap tech, there is a rotation, but a lot of these stocks, they come off their highs for a couple of days, but they don't really go anywhere. NVIDIA made a new record high yesterday and then again today. That is as large cap tech as you get. Arguably, it should have replaced Netflix in the FANG acronym long ago. And that stock doesn't care that there's a rotation going on. They are literally changing the world and eating the world with both software and cards and chips. So I just don't see that you need to have a rotation. It's nice that we do, but there are plenty of large cap tech names at all-time highs, and they're like not paying attention to the fact that they're supposed to be down just because copper is up. Like they're doing what they want.
Just under 2 minutes left. Mike, what are the internals showing?
Been a little stronger than they've been the last couple of days, actually. Well, if you see the split on the New York Stock Exchange, not quite 2-to-1 to the positive side, but again, nothing going on really at the S&P level, but it's a small cap led market, and it's obviously showing its way into stronger breath. Take a look too at the beta trade. High beta is also basically a proxy for more cyclical stocks. Had been lagging for a while. You had this burst. This was a grab for beta. That's what small cap is. That's what energy is. That's what some of the industrials are. So that was the big story, at least in the morning. Volatility index has been backing off, as we know. We spent most of the day under 17. Now it's a little bit above there. So downtrend intact. I do think that you're starting to see if small caps and some of the sort of hyper growth stuff starts to perk up, maybe it's going to stop going down at such a fast pace. But so far, not standing in the way of the market sort of supporting itself at highs, Sarah.
All right, so there we have it. We got the market close here. I appreciate you guys coming out here for this live stream, joining me for the Coinbase IPO. We saw some fireworks. This is what we came for. We came for the action. We hit a high of like 430. It closed around, 330, about $100 below the highs. And crypto, it seems like it's pulling back here. SPACs overall look like very low volume right now. CCIV, very low volume, very dead. This is a time to buy some leap options, naked calls, or buy the shares by themselves. And yeah, it seems a bit boring, and it is. And it seems like it's going to continue for a few weeks as well. It's definitely lasting longer than I thought, especially because we had, stimulus news coming in strong. We have Biden signing off these trillions of dollars stimulus packages. And there's a lot of good news out there, but unfortunately, we're not seeing this, this surge in the market for now. Volumes are very low. Markets are very dead. If you're new to trading, this is what a summer looks like in trading. And we're not in summer yet. So typically, low levels of volume. This is what a typical normal market summer looks like. It's very dead. It's time to sell options and just let the time decay eat up those contracts. And if you do buy stocks, if you do buy options, make sure you buy a lot of time. You'll get the best pricing with low volatility, low volume, since there won't be a lot of people buying them. And it's basically what we're going to be looking at is a nice sluggish market for us trading low cap stocks, high growth stocks, and SPACs. I appreciate you guys coming out to the stream. Make sure to check out my Discord, Patreon, all the links below under the description of the video. I have tons of links there for apps and information. And that pretty much does it. So thank you guys. I'll catch you guys on the next live stream. Hopefully we can get some CCIV live events. And I'll be here. I'm thinking of possibly going to some of their showrooms and videotape the showrooms for you guys. So I'll see if I can get that in the works within the next few weeks and check out some showrooms. I have one not so near around my place. I'm in California. There is, I believe, two within driving distance, but they're not nearby. So I'll see if I can, maybe interview one of the employees, try to, try to get some information off of them. And see if I can interview one of the employees at Lucid Motors. So that's what I'm working towards. I should have that maybe by the end of next week. And I'll go take a spin. I might go tomorrow and see if I can schedule an appointment or something. So yeah, a lot of cool stuff coming up, guys. Thanks for joining the stream, and I'll catch you guys on the next one.